There we go. Good morning. This is Simon with Trading Perform Coaching. Let's see here. Welcome to the market preview. Important disclaimer real quick. I have to throw this up. So here comes the throwing up part. Past performance is not indicative of future results. This is for educational purposes only. I'm sharing my trade plan with you in hopes that it makes you a better trader. However, my style of trading is not for everyone. Please don't follow me blindly. Make sure you know what your risk parameters are and that you can afford to take losses, because trading involves losses, sometimes substantial losses, right? So the goal is to have a high win rate and a good risk reward. And the room's all about the struggle to get to that point and understand what you're doing and what you're looking for so that you can put on those high risk reward trades without getting blown up, right? Which is really the trick. So we are currently trading. Well, let's just start with CL. So I didn't do the charting last night. I have just a little too much going on. This is prior day's point of control, both volume and TPO. Is that right? Yep, both volume and TPO. That's really the line in the sand. However, we ended up in a balanced profile for the day session, and you can see there's a significant gap there. So the first thing when I look at this chart is, this is a difficult place to trade, except that when we're trending up, right, this becomes stronger than if it had been just in the middle of a range. So it's still a blue area because I expect there to be noise and chop in that location, and you can see that it got front run in the US session by a few ticks. Usually this will get tested. Usually it'll be choppy, and it's a difficult place to trade in. So it's light blue. There's the other area here is this location right here. And you can see we rejected out of that area this morning already. So above here, we have plenty of room to the upside. When you look above and what's next, it's this area up above. And I'm just going to tag these as one big location. Okay, so from 57 to 82. So the way you do that is when that area is large like that, just usually what the market will do is it'll respect the front and the back. And we're just generally looking for a setup in that area. There are anomalies in here. I'll cover those in just a second. We want to do the easy parts first. So this is a valid location as well. That's an anomaly and naked point of control that got traded through in the overnight session but never tested during the US session. That'll normally be respected. I would expect a response out of that 65 area. It's also a round number, right? And this is the top bottom of an open window, right? So I'm going to signify that by putting a dash there. The next thing I want to know as I'm drawing that up is where's the mid of that gap for the US session, right? So remember, I chart the US session. I expect a response out of that 64.60, 64.53, looking for a setup in that location, right? And then finally, there's an anomaly down here. I don't expect to get any further than this, and I expect a response out of 63.80 if we could somehow get down there. I'm not going to worry about what's below unless we go into a long liquidation. There's been absolutely no indication that we have any ability to get down into any of this. So that concludes the charting for this particular portion of the chart. There is, actually I take it back, one more piece, because that's a volume point of control right there. How am I going to do that? That is also a valid trade location, but I'm going to make this light blue. Why? Because when the volume and the point of control and the TPO point of control are separated like this, when they're together, they tend to be very strong because they obviously have members from both charting parties together. When they're separated, right, you have the volume profilers looking here and the TPO guys down here, right? So why am I going with yellow in the back and blue? It's not that I favor one over the other. I just want the stronger location, the bigger stretch, to be the area where I'm willing to be more aggressive than the light blue area. The light blue area, I just want to see more evidence before I take a trade in that location. But the whole thing is valid from 63.99 all the way down to 63.70. That whole 20-cent area effectively is good location plus Dalton's gap fill, that little dash. So when I look above, the next thing I want to know is what is in this area between here and here, right? So what I'm going to do is grab this, and I'm going to go back in history till I find where we are filling in that location. And we go back, and we go back. Oh, and there it is. Okay, so let's see what's over here. There we go. So anomaly, but volume build and low volume nodes. So I'm going to use this whole thing from here to here, that becomes a white zone, actually. Why? It repairs that chart from the day, repairs the 11-1 chart, right? And there's multiple ways this can come. So I would expect initial rejection out of this location, but also if I get an over-under, meaning we trade into it, possibly reject, get above, then get back underneath, right? And from this location, I would expect a significant roll to the downside. And the other thing I want to note in this area, see how this whole area is poorly auctioned right here? Meaning there's almost no volume or time spent in this location, right? So what I want to do now is I'm going to make this area color blue, line style, dashed. And the way I'm going to remember that going forward, that is a poorly auctioned area that needs to be filled back in. Come back over here. I'm going to erase that. And I'm going to remember that above yesterday's high, see how we were filling in volume yesterday? This little area right here still needs to be filled in. Okay, so how do I treat that? I'm going to look at this and go, okay, I know the volume needs to be filled in here. The anomaly, right, and the double distributions up here. This is my stronger location, but we may just reject in here, or we may just sit here and grind. In other words, it's nothing obvious, but I know that when we're in this type of area, that there's 3 different types of behavior that we usually have, which is either zip straight through, right? Sit here and grind, which is what I'm really concerned about because I don't want to get chopped, right? Or immediate rejection off the bottom and go. Either way, I know that this area will be a little bit trickier to trade in general, and this is the area I'm targeting both for my longs and potential short setups if I'm willing to short to the downside. But first, you obviously have to clear above prior day's high. And then before I post the chart real quick, what I'm really cognizant of is what the pattern has been in CL. So this has been the pattern. Break, right? Break. It's been usually 1 or 2 days of break, then sideways consolidation, right? Break, then 7 days of sideways consolidation. So we have broken, right? And so in order, what has happened each time? The last time we broke and immediately went into sideways. The prior time we broke, had one up day, and then went sideways, right? So it's been 1 or 2 days almost every time. This is the last time we really broke balance and just had day after day of up. And even here, we went through an extended period of balance. So I would not expect us to trade straight vertical because the market likes to repeat. My guess would be, looking at the profile, is that both sides of the market will continue to work from key locations, both short and long. And just that yesterday was just the first day of the break. We could have another update today, right? But after today, I would expect us to start looking towards a balanced type profile, which means because we're in an uptrend, if you go back and look at all these dates here, you can look, and most of the time at the end of the day, meaning towards 10:30, 11 o'clock, towards 1 o'clock, we were pushing up. We've gotten very, 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 very few days, almost none, going all the way back to March 8th, where we've closed at or near the low. This, I think, is as close as we came back on April 3rd, right? So one of the things I'm looking for is if we push down at the end of the day, I'm looking for my long setups to push back up, particularly after 10:30, because that's just what the market's been doing repeatedly, is doing this slow grind in the afternoon. And until I visually see the pattern change, I'm going to believe what the market's telling me, which is buyers are coming in late in the day with a push back up. So shorts earlier in the day are working well. Later in the day, the longs are working really well, and shorts are harder. So I can adjust my trade plan to be less aggressive on the shorts, or not take any shorts after 10:30 and look for the longs. And I can know that if I am getting short setups prior to 10:30, right, that I can take those, but be cognizant we just haven't been falling apart. You want to have a scale plan on the way down. So that translates into this chart right here, right, which is the overnight for today. Let me get over here. Let me mute everybody out. Mute all. Yes, there we go. And let's make this 24 hours so everyone can see what it looked like on a 5-minute. This shouldn't take too long. There we go. So here we are. If you look last night, how we traded. Okay. Here's Asia. All right. Here's US session. Here's Asia right roughly here. That's 1700. We opened up in the yellow zone, right? I realized I put that in this morning, but the anomaly was there whether you traded it or not. We opened up, resistance, rolled to the downside right into 8 o'clock. This area has now been tested once, right? Now we've gotten over and under. So if this was a short market or a market moving lower, right, on the over-under on CL, I would now be looking for short once we're underneath here, which hypothetically at 4 in the morning in the European session, excuse me, was that NQ? That's not right. Sorry, forgive me. I apologize. I got CL. Let's go back and do this correctly. Sorry about that. Where the heck did my CL chart go? There it is. Okay, let's try this one more time, Simon. Here we go. Now we got it better. It did the opposite just. Okay, so here's Asia, right? 422, 423. Here's Asia. That's Asia open. Yellow zone that I just put in, right? But the anomaly was there. Rejection, rejection, right? Above, backside tested. Again, this is Asia. It's super slow for the most part, right? Asia, backside test. I'll throw up the NQ and ES charts in a second. And rotation to the upside. Roll down. This is support till broken, right? This is resistance till broken. Prior resistance equals support. Backside test. Push. Roll down. Test at 7 a.m. Yesterday's volume point of control and TPO point of control. It's a prior day session. It tends to be choppy. Sometimes it works perfectly and just comes in and out. Usually this choppy noise right here is normal around specifically the prior day's point of control. Lowest, this is what we were covering in Joyce, excuse me, I apologize. Joyce, this is what we were covering in yesterday's coaching session, right? Back up to resistance, initial rejection, push down. Now they're trying to push back above. It's key that we hold above this anomaly to press higher. This area is what I highlighted in the charting just a moment ago. It's poorly auctioned. This is filling in the volume on a 24-hour chart, right? And we still have to, and the way I treat it is when we open at 8 o'clock, regardless of what happened over here, the U.S. market still has to check up on all of this. So I would expect, based on what I saw in Europe, rejection out of this area initially, right? Additionally, from the swing high in Europe, right, the 50-60 retrace, which we're in right now, meaning the back of this anomaly up to the 62, that's the hurdle to get above to push out and through to the white zone. And my target for the day would be the 66.56, 66.85. In order to be short, since we have gapped and we're one time into the upside, right, a couple things have to happen. First of all, I have to be below this blue zone. No shock there. Secondly, from yesterday's low to today's high, the other thing you want to be cognizant of, and you draw this out on your own charts, is that this is also the 50-60, right? This is the 50 retrace. That's the 62 retrace, and it coincides with the anomaly. You'll notice in this case, right, the anomaly takes precedence over the 50-60. Therefore, it just try to squeeze behind the 62, and you're stacking evidence together for a contra trade. And this is the 50-60 back on the other side. It just because it's a 50-60 does not mean it's a short, but we tend to travel 50-60 to 50-60 and anomaly to anomaly. Finally, in order to come down and test these areas below, we have to get underneath prior day's low from the U.S. session, 65.27. I expect a response from here, right? I expect a response from here, right? And this area specifically, why do I have that like that? This one's an anomaly and one's the 50-60. So this, we're going to change this here. This is, so we know what it is. That is the mid of the half gap. And I'll mark that down. Mid of gap. Okay, let's move that over. And voila. We have our key locations. We have our key locations for the day. Green areas, prior day's high, low, right? And then this is the key target above, right, for the day. And then down below, where would I want to trade more than anywhere else? Either at this anomaly that's gone untested, right? I'm going to remove this anomaly, or the mid of the gap, half gap, right? And I know this area is generally poorly auctioned from this blue area, from prior day's high to where the blue dotted line is, okay? And that basically sets out the charting. And again, I think the dips can be attacked pretty aggressively on CL. If you are aggressively shorting, trail down. That's all I suggest, because buyers have no reason to go away at this point. In order to get sellers and to break a market, you got to have someone losing money to be aggressive on the sell side or panicky. And there ain't nobody in the world except these guys right here who've recently gotten trapped, right? So one day it will change, just hasn't changed yet, right? So next, let's go to printing this, edit, chart to BMP, and file, save as JPEG. CL 423. And again, I apologize for getting these out so very late today. And then we'll do ES and NQ, your computer. I don't trade the first half hour for those who are joining on YouTube. 423. Okay, and that chart is now posted on the Slack channel, guys, for those in the room. There you go. And now let's go do, before we lose our work, file, save, minimize. And look at those shifts, just beautiful. Okay, let's go do ES really quick. Okay. 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 Easy. Prior day's high. So first of all, I'm going to note on ES, the rotations have sucked. Not just a little bit, horrible. Pretty much if you're not buying on the open or the first dip, right, which has been a little tricky some days because the open drives lower. But after 9:30, the shorts have been difficult as hell, right? So basically every dip is getting bought. Point of control, TPO and volume, blue area, choppy and or easily traded through. Hard to get a position with a tight stop in the area because of that choppiness. Sometimes it works great. Sometimes it works horribly. And the problem is it's about 50-50. Expect choppiness in this area, right? So when I look at this profile, the problem is there's really nothing above and nothing below. So what's important to me on that profile is value area high, right? Because there's nothing else to, and there's nothing below value area low. Therefore, consolidation underneath value area low would make me think maybe we could roll to the downside. Continued consolidation or failure, even though we've had gap fill in the first hour, failure to get below value area high would make me assume that they're going to drive out. That combined with the current market temperament would be like, well, why are they going to do anything different? We would need a change in character or a change in the way the market behaves to think that we're going to get anything other. What would that look like now? Because I've been saying that for a while, and I was speaking to one of my coaching clients. Who was I speaking to last night? Gosh, I was tired. Peter. Okay, so Peter, hands down, is the best options trader I've ever known, personally known, easily, right? And he just said, well, we just have no idea when it's going to look short, right? He goes, it's just blown everything out of the water in terms of expectation of a give and take of a market. It's just been a straight grind up, right? He goes, so when I got done talking to him, I was thinking, what is it going to look like when it comes down? Well, first of all, it's probably going to look like trend down. Support levels are going to get busted. Rotations are going to open. The speed will get quicker, right? And we'll go like, holy crap, they busted the level like in seconds. Like we'll be shocked almost at what it looks like, and we'll know they're hitting the exits. And then hey, and it'll be more than one day, right? It won't be a one morning sell-off, because if you've looked at the history of this thing, right? If we pull this chart in and we look at this, anytime in this period, starting from right here, 325 all the way through today, any day that you looked at and said, oh, this is the day, right? There's open drives lower in here. There's some gap downs. There's holding underneath prior day's value area a little bit. But if you interpreted any of this, anything in here as the beginning of a profit taking or 50-60 back or anything else like that, if you interpret any of that as a potential short, it's been very, very difficult to get those shorts to pull off. And if you tried to roll down, and if you tried to stick them, they just bone crushed you, right? They all all came back. And usually getting a period like this is not unusual, right? But then what you usually would expect are these opening up to the downside like we got in early March or mid-March, right? We just haven't gotten it this time, and it's just how it is, right? And so what I've had to do is go through this process of kind of surrendering the idea that I have a two-sided market, or even better, like down here, I'm like, hey, on the dips, look for long location, right? And we're just not getting those dips. I keep expecting a day, if not intellectually, at least emotionally, for day to open up and go, great, we've trapped somebody. We've come down and tested a naked point of control or a volume point of control or a TPO point of control or the mid of a half gap over here or something that goes, boom, I've got the location. I'm going to load this trade up and roll it back to the upside. Instead, what's happening is every single morning, just like what we have right now, right? Here's NQ and ES. Well, again, every single morning is dip and buy. And something now they're not even waiting for the dip, right? They're just F it. We're buying it right out of the gate, right? So what the deal is this, right? I know that I suck at this, right? I'm not going to buy. It's 8:40 a.m. I don't trade the first 30 minutes. And the guys who are killing it, people I'm hearing back from who are killing it, are trading the first 30 minutes. That's all there is to it. I look back at 20 some odd years of trading and go, okay, one of two things has happened. This is how it is from now on, and I'm going to have to learn to trade the first 30 minutes. Or I go, we're kind of having an August and July kind of August and April kind of thing where it's just slow and grindy, and I'm going to bide my time until I see it open up. So one of the two things is true. We're in a new paradigm and the market just goes up. Possible, right? Not probable, but possible. And I need to change my trading style to trading either before the open or at the open or very close to the open, or I'm going to be patient and let the market come to me, and I'm going to ease off the shorts significantly, which has already been done, right? And I'm going to wait to see the price action either change and come to me, or I'm going to go trade something else, i.e. CL. Peter told me that the Russell 2000 is trading quite nicely based on the way I've taught him how to trade it. And so I might need to start trading the Russell again because he says it's really just balanced. I just took a brief look at it, and I'm going to need to chart it for a couple days. I haven't traded it in a long time. He said Russell's working quite nicely. But the important thing there is this, right? If I have a bag of capital that I'm trying to make money with, right, and the worst thing I can possibly do is go, the market should not be doing this, and therefore I'm going to short it, right, is not a viable option, right? You can say, it's weird that it's going straight up. You can say it sucks that it's going straight up, right? But what you cannot do if you want to survive in this business is go, I know everyone who's buying this is completely wrong, therefore I am shorting them, and I'm going to try to stick every short, right? And if I get stopped, as I did yesterday for 10 points on NQ, right, on a trade, I would have taken, even in this environment, almost every single time it's set up, and I'll cover it in a minute, right? I'm going to go, wow, that was a really good setup. It shouldn't have stopped me, right? I think I'll stop trading it until I see it actually respect that for either the day or witness a full day of it actually working, or something that would give me a clue, like the velocity of the rotation to the downside, the inability to get back above a break or trap back in, to go, hey, now I can lay my capital out and really freaking get aggressive on the short side. Instead, what I'm going to do is stay humble and go, man, they just kicked my ass on a pretty damn good setup. I think I'll just keep my money in my pocket and go look for another trade, or I will simply go, I'm frustrated, and withdraw completely from the market. But I won't keep, as I would have done not so long ago, 2015, 2016, I'm going to keep firing up and keep loading up on my trades over and over, and I'm going to keep fighting this thing all the way up. And that's been my saving grace the last, really since this January 1st, is I've looked at this, and anyone who's in the room, Victor, Bill's been in here, you would know 2015, 2016, I'd be like, short, goes another 10 points, short, and I'd get run over, right? I have 2 stops back to back on some days, and I'd quit trading for the day, and I'd have to make it up the following day. Now, if it runs me over on my first trade on a great setup, I kind of go, time to pause. And there's one other thing, and this is really for the guys in the room. I'm having a hard time. When I get this shift, see this shift down, and I get this shift up right here, I know that is a good entry right there. I know for a fact, just based on all my research, this entry right here, guys, we get the shift down and comes on the other side and shifts up above that. I know And plus we had the 3 across right here. You can barely see it, but it's there, I promise you, right there. So we had on the delta wave, we had a 3 down delta wave, and we closed above with a shift up. I know that's a high odds it's going to take off kind of trade, and you can see we're pushing into the gap into the next location from yesterday's chart, which I'll pull up in just a second, right? I know this is a very good trade. Most of these setups are taking place at 8:30, right? Between 8:30 and 9 o'clock, and I don't trade in that area. And until I am prepared to lose money in that time frame, I'm just not mentally there yet. I'm not taking that trade, right? Because I have too much experience that tells me this comes back against me and causes me an immense amount of pain right over here, right? So I'm just gonna have to watch it and go, they did it again in the 8 o'clock, and it's been true for the shorts and the longs between that 8:30 and 9 o'clock. This is my suggestion for people in the room. If you see this setup and you're comfortable taking a loss between 8:30 and 9, it is a viable setup. It is what I coach, right? When I'm coaching one-on-one, it is what I coach as a viable setup. I've just had too many bad experiences between 8:30 and 9 o'clock, right? And I am choosing not to take my signals in that time frame. It is all right if you do it. Just make sure that you've accepted that it can get volatile in this period, and my win-loss rate drops historically in this time frame, and that is why I don't take it, right? And I'm just not prepared to take it there yet. So, long story short, that's the deal. Let's go chart it out really quick. Okay, let's pull this apart and spread it out a little bit. Okay, so number one thing when I look at this chart, besides this being prior day's high or low, so see all this balance, value area, value area, value area, value area, value area from yesterday. When all these value areas and all these points of control line up together over 1, 2, 3, 4, 5, 6, 7 days, or pretty much if you took the point of control of all land on these days, would all land between 2908 and 2910. Bill, I'm sure you'll back me up, whatever the MC point of control is there. If you could throw it out at me when you get a chance, I'd appreciate it. But I'm positive the microcomposite point of control is right in here, right? So, yes, this was yesterday's volume point of control, TPO point of control. But if you look at this over multiple days, this has both been a point where we've had inflections up and down, but it's also been a point where we've traded straight through repeatedly, right? We've traded into it and above it, and you can just tell that from looking at the profile, right? If I break this out right here, you can see we zipped right through. If you look right here, we zipped up and rejected, right? And if you look over here, right, we came up, attempted to reject, and pushed. This makes this a pretty damn hard area to trade in, right? So since we're in balance, my two questions are this. Almost all the value area goes from yesterday's high, right, till just about yesterday's value area low, maybe a little bit lower, 2902, 2904. So the first thing I know, 2900 has been repeatedly defended, right? My guess is there's buyers at 2900. I don't have anything to pin on at 2900. If you look both the volume profiles and the TPO, see how the volume's all tapered off down here. I have this little hinge right here at 2899, 2900, but it's not a big volume build, and there's nothing in the TPO. So all I'm going to do is go 2900, 2899, yesterday's low. That's an area where I know that people are just emotionally at least stepping in on the market. There's no volume there to defend, and there's nothing in the profile from the TPO standpoint to hang my hat on. So there's not a zone there. You just need to put in your notes. 2900 has been defended repeatedly, and when they've gotten below it down to this 2894, whether it's one tick below or they've actually tried to push below, as soon as they get back above 2900, they have repeatedly pushed. So we have a great clue. The market has an issue if it closes below or consolidates below 2900 with an inability to get back above. We know that we can then come back and retest, right, areas lower. So see this right here? This is a volume point of control that just barely got missed. See that right there? And if you look underneath as we push these together, this is another from prior, right? This is the naked point of control going back to, let's pull this apart a little bit. Going back to, wow, that profile totally blows. Okay, see how these volume points of control, this almost got tested. This just got tested. And so if you get sell pressure, these become very easy to break, right? So I'm hesitant to put a support zone here. And then what that leaves is this TPO point of control by itself. So this already got tested. I know this is our current swing low, right? So I'm going to color that red and dotted. I'm looking for traps there. I mean, I want to see it trade below and then trap back in and see if it can push. That's not a horrible idea because we've been getting responsive buyers from this area, but it's not a zone. This is a zone, but it's very tiny and it's a single point. So it's light blue. Why? Because when there's not a TPO and a volume point of control together, my experience tells me that they tend to be easier to break. Therefore, I don't want to put a zone there where I can just go everyone in the room, hey, we should get a response there. It is on a stretch from 29.17 to 28.90 would be 27 points, right? That would be a pretty good stretch on ES, and the answer there is where this would become really vulnerable if we were to gap down and open drive lower, or at the end of the day if we got shredded. But that probably, because of the strength of the market, that probably gets a response anyways, even though it's light blue. So context means a lot, right? This is on a stretch, even though it's a weaker zone, someone probably tries to step in there. This has almost been tested. It is naked. There's nothing on that profile. If you look, going back to the 9th, there's nothing down here, either volume wise or TPO wise, that I want to hang my head on. Actually, all the way through this, all of this is shite, right? It just does not look good. Okay, so again, that's a light blue area because why? I don't want to put my money there blindly unless I see a clear setup. It's on a massive stretch. I don't think we get there today. I'll be shocked. We'd have to long liquidate and fall apart, but it's there. And that is our prior swing low, which has been untested. And because it's been untested and because it's on a massive stretch, whether we hit that today or tomorrow, I would expect a response right in this area. But most importantly is when you look, see how all the way underneath here, this is the last TPO volume point of control and TPO and volume point of control that are together. Therefore, to me, it's not as good as having no points of control underneath, but this becomes a pretty black hole because the first place that we have a volume point of control and a TPO point of control together is all the way down here. Now, I don't expect to get there at all anytime this week, actually, because I'm going to have to see a change in character. But I also know that if I get underneath this, that the potential for long liquidation exists, right? And then finally, only because this is such a massive stretch and there's actually an anomaly right here, this becomes a key location. I would expect a response. This is the top of the open window, right? Again, I am not going to, and that actually is red because it's also a swing low, technically. Top of Dalton's Gap fill, right? Mid of the half gap. Mid of the gap, excuse me, right? And pretty much that's how you come up with a chart. We don't have to worry about any of that below because there's no indications that we can make any effort to get to the downside. As you will look to the left, this was all where we had the long liquidation on Thursday, I believe, or Wednesday. And there's no volume here. See that? There's nothing here. You can hang on that little hinge right there if you want, but because it's the only thing up here, but I would not want to short this just from a profile standpoint until it gets repaired. And remember, because no volume went off here and no time was spent up here, the market, if you look back to the left, right? So this is our current swing high, right? And if you look back to the left, what does it like to do in those areas? So the market will tell us, right? So if you look on days, so see through here how we had almost no volume. See, even though so you can long liquidate through an area with no volume, but see how it spent time actually building volume in there? Here, I'll show you. Okay, see how we sat here and kind of doubled over, then we swept through, and then we doubled over again? This is the process of filling in volume where there is no volume to be put in. And if you'll notice, we do the same thing over here when we get back up. The market wanted to fill in even more volume. You can see the volume building over here, right? And then we gapped through this area. We traded through overnight, and we got over this little ledge right here, and that's what pushed us to the upside, so we never got the mid of the half gap tested, okay? So we're one timing. We're strong. We're above prior day's value area. We have failed to trade back in. We filled the gap from a settle standpoint. That's a retail trade location. It's considered weak by Dalton standards, right? And then we need to fill volume in this area. And we may just sit through here and just go up and down through this area and fill in volume. But most importantly, what do you need? You need a change in character. Even on a close at the low of the day, right? You still, the following day, even though we traded below the low, the following day, right? What did we do? We just dipped underneath, and then immediately came right back, because what we did was we came to the, this is the mid of the half gap right here, response on the 15th. Then it came in and filled down to where this little volume build was. And normally, right, you would say it's going to get down and test this location down here. But because it's so strong, we don't ever get the stretch to get down into really key builds on the lower part from time. And by the way, just for guys who are profile versus TPO, see how all the volume builds up here and the time build is up over here? This is a slow, grindy day, and my guess is all the volume got put in either at the beginning of the day or at the low of the day, right up there, and they were never able to shift value. So, and because the market's strong, instead of repairing this chart and making it clearer, we just, everyone was eager to buy. They bought the clip, then they bought, even though it was a weak location, they bought it, trapped back in, pushed back to into the mid of the range. Okay, so for today, right, I'm not eager to short. I have nothing to hang my hat on. If I was going to hang my hat on anything, it would be this little thing right here. And it would be, if I had something lighter than light blue, that's what it would be. I would not want to blindly short that location. Now, I know it'll probably work absolutely perfectly now, but that's the last little piece. And just know it's actually only on volume. It's not even on TPO, so I'm going to dash it out. That'll remind me not to take that blindly, right? And it can get blasted. Okay, so now we come over here, and what that ends up looking like is this. And so what you will see on the day on the 5-minute chart is we opened up, we tested prior day's high, we went immediately into grind mode, and the logical target actually above is, let me finish that out. Let's go look. Damn, 29.48. See when there's no naked points control above? I don't give a shit what that is. That becomes insta white zone. That is the target. And then let's go see what's in the middle here. Oops. I bet we have to go back to November for this. Ah, there we are. Lovely November. High. Anyone see that? All right. So I'm going to mark that off. And I'm going to make it freaking enormous, because it's a very important area, right? If you look in this time frame, this is going back to 926, right? That was effectively a double top that we fell off of, right? This is the last anomaly up there. That's that white zone I just tagged. I didn't know what the profile looked like. It's a double distribution at that point. This is a really important area, right? And I would look for rejection out of that area. This is the first of a double distribution. That's a valid location and a naked, so all your retail traders will be looking at the naked gap that's there, all your gap fill traders from the settle price in that location. That becomes a key area. There's a gap here, but if you'll notice, there's not a Dalton gap, because if you open that way up, right, up, there's the tiniest of gaps. There's a gap from here to here. And I'm just going to dash that. That effectively becomes the mid of a half gap and a likely area to get rejection out of. I'll mark that down as a open gap, mid of the half gap. And then there's a tiniest little anomaly. And since we have nothing else to hang your hat on, that is light blue, but it is an anomaly. And now we know what the hell to look for in that big area, and then the swing high. Now, when we come back and look over here at this chart, that's the mid. Wait, yeah, that's mid of a half. No, that's the anomaly, weak anomaly, but the only target up, right? Spell, everyone already knows that. And that's what we look like above. And this is the obvious extended target. Obviously, I don't expect us to go up straight another 30 points, but it's only 30 points, right? We can easily make it. Okay. Alt and that is contract adjusted all-time high. Okay. And those are the zones. And then this is the mid of a half gap, mid of a gap. ABCs, where are you? There we are. Mid of a very small gap and Dalton's gap fill. Okay. Or white. Again, I'm watching the markets and they are just doing what they do lately, which is grind straight up. And if it doesn't give a rotation down for me to get a location, I'm pretty much screwed on my trades, and that's what it's doing. And I'm just going to have to laugh it off. Like I said, it's August and April. So hopefully it'll open up. Eventually we'll find the last buyer, right? All I can say is below the exit doors, very, very narrow, and someone has sprayed it down and frozen it with black ice. That is not the same as me saying it's going down or it's short. Just when we do, it's going to be one thin, nasty locations to try to get trades in, and the volatility should open up significantly when and if it happens. Okay, so now we just come up and post this up. And I'll just go from the swings below and the tiny support areas. And then when you look, right, 20 down from where we are right now puts us at 2,900. I expect a response there. There's a current swing low, weak, but because of stretch, probably a return. The first decent zone I have is all the way down there at 2860. And I don't think we have a remote chance in hell of getting to that location. And so I think the zones that are probably relevant for today is this. Because of that, right? And I will go edit P file, save as JPEG. Yes, 0423, save. Hell, at least I feel like I get a sense of teaching somebody here instead of just showing up and watching it keeping grinding, right? And then Bill, what was that micro composite number? It's so tiny I can't see it, buddy. Without blowing it up, would you mind just posting where it is in that area? The number? Yes. 0423. Okay, guys, there's the levels posted in the room. 4. And apologize for it being so late. Not that it matters. Up is the way it's going. See how we rejected right off? It's a weak anomaly. See how they're getting an initial rejection right off that level? Okay, so Joyce, that's where we were coaching, where you were asking me yesterday, right? Anomaly to anomaly, even weak anomalies, right? Even if they're not good locations to establish a trade in, they give you a place to look upstream and go, well, where's the likely locations we're going? And even if you're not shorting, right? If you're long from here, you go, that's where we're going. I'll scale there, or I'll target that area for a trade to the upside, right? And you can just build one place. 2908 and a quarter. Thank you, sir. So below 2900, then the whole below 2908, then getting below 2900 opens this up for a potential further move to the downside. So this can get blown through. I would not want to trade here without a lot of evidence. And plus the PA does not say short me, right? The PA says, get the hell out of my way and let me do what I want to do. Okay, so next, let's just do NQ really quick, and then we can just get on with the day. So, and is there anything else? think that does it on that. And then let's go look at NQ. Okay. Wow, this sucks. Let's do this. Gone, 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 gone. Oh, no, that was good. That was actually a proper anomaly. That's all right. Old swing high is what that is. So same thing here. Just easy mark off. Prior day's high. Prior day's low. Same story. I wouldn't. I'm looking for longs until such times it breaks. That's actually a decent. This whole area is an anomaly here. I know it's a fat area, but that whole thing is valid. Specifically that right there. So when you see these lined up all triple, that's all a valid zone. But that specifically is what I am looking for. There's really no volume that build there to hang your hat on. And it's in 3 days of balance, right? So when I look at this, I know this is a harder place to trade in. So what do? Color. I switch it down to light blue. And the way I'm going to denote this is I'm going to break it into 2 sections, right? Because otherwise you think, oh, the whole thing is valid, right? So I have 2 ways of treating that, right? If I'm a swing trader and I think we're going to keep going, I want to plan to build all the way through this area and even a little bit behind for push back up to the upside, right? If I'm a pinpoint sniper, right, I need to see the evidence off the 3 range chart on these to get my entry signal, right? And what I know is, so this is also, this whole thing is an anomaly, but specifically that's the volume point of control and the TPO point of control, and they're together. And it's important in that area, even though it's light blue. So it's light blue. So now you have to have notes on this, right? This is light blue because it's a prior day point of control and TPO point of control. It tends to be a choppy location to trade. These are light blue because even though it's a valid anomaly structure and it's not the TPO point of control, it's in the middle of 2 days of prior balance. It's the 3rd day where we're trading that area, and it becomes very easy to slip through this area just like we did yesterday, right? If you look, right, we traded down overnight, and then we traded straight through there, right? So this is a warning sign in this whole area. The market tends to repeat behaviors. We can trade through this pretty easily. So I don't want to make any of this a strong zone. Why? I don't want to take a trade blindly or get uber aggressive. Sometimes I get uber aggressive on the intraday patterns and go, that's an area that can hold. It's really strong. I'm looking for just an excuse, like the wind blows in the right direction I want to be in. I don't want to be on the uber aggressive cutting edge. In here, I want the whole thing to set up properly, right? And I'll wait for it in this area because I know we can just zip through that whole thing, right? Underneath that, so you'll want to note this is this week's low, right? I guess this is this week's low. This is Thursday low. There's nothing there really. I wouldn't even call it a swing low. So this is a proper support area. That is a valid support area now because it's more than 24 hours have elapsed from that point of control. And the zones below are all correct. There's nothing for me. That's just from yesterday. And then above, right, what am I looking for? Notice, oh, hell. How many days do I have on this? 300. Are we at new all-time highs on NQ? I don't believe it. Let's try something here. Chart settings. This will take a minute, guys. But we'll wait. Let's go back 600 days. We are at new all-time highs, Bill? Oh, you're answering yes to something else. I thought the highs were above. Let's see. NQ is? Oh, okay. Well, there you have it. My bad. I didn't even catch it. Breakout to new all-time highs. So there's nothing. I guess this is the old swing high right there is what that is. So watch for potential trap here. If you feel like living on the cutting edge of Shortville, this was the last right here. There's nothing else to hang your hat on here. So I want to see what's back here to the left. Let me look at this. Let's go back and look. This has to be way back in August, I guess. There we go. Okay, so this up here, what we have is that we had a zone right here. Right, that's yesterday's high. That was a valid location. And now, oh, there we go. Anomaly. Almost tested, but there's still a volume build there. Damn. Almost tested, but months ago. anomaly, volume build, all-time high. What do I want to freaking do with that? Just at all-time highs. Over, under, if we get back underneath that 77.67, I'm going to leave it there because that sets up a roll for move back to the downside. Oh, that was a typo. What is the level, Bill? 77.87 maybe? I wasn't clear what you were writing on, what you were referencing as the typo. Let me know when you have a chance. You may be trading, so just take your time. There's obviously nothing above that. It's just a black pitch. So, yeah, that's interesting, right? There's just nothing up here since then. Look at that. Let's go back and look. And there we go before. That yellow zone reject was an area of rejection 2 times. Underneath that 77.67, if I get set up short-wise, I may actually get aggressive on that. If we get underneath and set up underneath this 77.67, I'm going to leave that as a yellow zone. So as an area of interest. And yeah, wow, look at that. We blasted this. So see this, how we blasted through this area, backside tested. So the reason why there's buyers right here on the 77.76 is because normally if you were a computer, you don't have any emotions, you go, that's an area where we should get rejection. So once it blasts through and they go, oh, they didn't reject it, people have to cover that. If I get underneath that 7767, underneath that, I will actually be willing to look for shorts, but I got to get underneath this. That would indicate to me that there's potential exhaustion above prior swing high, then get underneath. And what's the last thing I need to see? NC and NQ. I want to see up and down at least 10 to 20 point rotations before getting aggressive with it, right? So here's going to be the pain in the butt about this. When we roll down, it's probably going to be like this, right? Because what I want is no, don't do that. Sorry. What I would like it to do, like the picture I have in my head is this. Up. I would have looked for rejection, no rejection. Over. Backside test. Press, right? That's all normal. There's nothing wrong with that. Prior resistance becomes support. But now what I want is I'd expect it to come back in. They probably hold it again. If we get underneath here, what I want it to do is what it did over here. Backside test, give me the entry for a push back down, maybe into further extension, right? Unfortunately, what's really likely to happen is this. Let's see. Oops, place that. What's likely to happen is, so we already know that it's done this, this, and this, right? So now what I want it to do is set up really conveniently, right? I want it to come back, do a little stutter step, fall underneath. And then what I want, so I don't have to short it right underneath, is I want it to come back over here and give me my setup to get this trade. What's more likely to happen is just wham, stutter step, wham, right? Because the door's pretty damn thin. You can see there's just been no volume put in, right? So if that happens and I don't get my entry over here, that's okay. It would still open up the thing and cause hopefully some fear. And then remember, even if it does all this, so there's 2 things. Intraday, right? So we're trending up, right? So you want to remember right now, if you take the 5-minute chart, let me do this. Okay, so then this all becomes okay. See that right there? So see where that anomaly is? See how they try to stutter step it right there at the backside test, swing high all time, right? New highs, right? So what I want it to do is come back and backside test. But remember, what we're looking for a real change in character now, intraday, swing low, open drive higher. On trend days, strong 10 days tend not to get back to the 50, 60. Now, let me give some color on that, okay? Just because it does get back to the 50-60 retrace does not mean it will not end up being a trend day up. It's just your first indication that, on really strong days, we just don't get back to the 50-60. B, the 50-60 as of now and until we extend quite a bit is lying just underneath this anomaly, right? Or if we go a little bit higher, we'll lie within that anomaly. We already know because the market is strong that all 50-60s are pretty much getting bought. If you bought every 50-60 retrace in this current market to the long side, you're a pretty happy person right now. You've had some stops and you've had a lot of wins and a lot of big extensions. Okay, next piece, right? If we do get behind this 62 retrace, assuming we don't make any further highs, that is a big warning sign because if you look on trend days, when we get behind the 62, that's where long liquidations fall apart. I'll try to show you an example of that in a minute. However, because of the market we're in and the constant desire to buy it, unless there's a dramatic change in the way that the market is trading, we are likely to still find responsive buyers at the low. And right now that I pull this up, I'm going to go just to the RTH. From yesterday's swing low. See how yesterday we didn't make it back off this initial swing here? Never made it back to the 50-60, and all day long, if you trailed this up, it never got back to the 50-60, right? Indication of trend. It was a painful trend, but it was a trend, right? So now if I'm going to take this, drag it all the way up here. This is now the mid, right? This area right through here. Right into where I have a blue zone. That is the 50 retrace right behind gap fill. And that is a 62 right through here. So I'm going to block this and then chop it so I know where it is. As of now, I'll just leave that up. That gray highlighted area, as of this moment, I'll have to adjust as we keep pushing higher, is the 2-day from yesterday's low to today's high. That's the mid. Look for an attempted response out of there, right? It's a big stretch. There's people trapped. And if we blast through that, so this is warning number 1. This is warning number 2. We get behind that 62 retrace, if it's still in the same place, assuming we don't make new highs. You get behind that. That should not happen, right? And then you can look to get really aggressive on your shorts when they set up, right? Because all of this being light blue and being well traded can easily get traded through. And then you can start to look for long liquidations down into clear support on the bottom side where you'd look to turn and be a responsive buyer in this area. At this point, that scenario is total trading pornography, right? Because the odds of us getting a roll down, the market has just said we aren't rolling down and we'll know it when we see it, right? This is all fantasy trade. I'm not even thinking we're going to get down into this area, but I am thinking, what are the warning signs? Getting back to the 50 retrace, getting behind the 62 retrace, getting underneath this anomaly, trapping back in an inability to get back above prior day's high, and then finally getting below the from yesterday's swing low to today's swing high behind that 62 retrace. Now, what that does for me, so let me explain what that does for me. If let's say I'm a person that I want to freaking terribly short this market, I know this run up is ridiculous. I'm the biggest bear in the whole world, right? Good. There's nothing wrong with being the biggest bear in the whole world, as long as you're not donating your money while being the biggest bear, right? So now I have a lattice or a framework to make my decisions. I've got to get behind 77.60 as of right now, right? Number 2, we've got to get underneath 77.57. And even once I do, I know this is a 50-60 area, so I got to get behind 77.20. I know that I do not expect anything really ugly to occur, right, until I get underneath. Oops. Bill, something typed, and then it didn't show up. Oh. 77.60 from today's low to today's high. That's the 62 retrace, Bill. Make sense? Just let me know when you see that, but that's the 50-60. So, again, lattice of framework, right? Underneath the old all-time high, below this anomaly, into the 62, which I expect a response from, inability to get back above, possibly short setup. Then, establishing behind the 62 retrace, I expect responses from here and here, and here, but inability eventually to get back above the 77.37 and finally behind the 77.20, right? And then I know, hey, things have changed. They've wiped out this opening drive. There's a lot of people trapped now underneath here. And if we can get underneath both groups of people up here, right, if you pull this chart in a little bit, right, all this consolidation, now we actually have a group of people trapped, and then we have to get underneath these guys to really get it crushed. But again, that's all trading pornography, and I don't have any illusion that anything is going to change until I see it actually change. Remember, markets go down on buyers that have been trapped, right? Who's motivated? Okay, so yes, I understand. Someone's going to go, that's a new all-time high. I think I'll take my profits, right? But when you look at this is a 5-minute chart, right? When you look at that chart, that's the last 20 days, I think, right? Anyone who sold anywhere, and really since December 31st, anyone who sold anywhere along the way has been punished for selling their position, right? Because when you sell, even if you're bullish, right? When you sell, you go, I'll buy on the next dip back. And then you go, shit, I sold and I can't buy back now. I'm going to buy up, right? Or I'm going to sit here and wait, right? But I can tell you, in October, November, and particularly in December, I put money in my retirement account to work. I had it in cash, put it to work, right? I'm not selling, right? I'm just not. If it pulls back, I have more cash. I'm going to put it to work. Why? There's been no reason for me to sell. It's not like I'm like, wow, I'm down 20% or down 15% in a cash account, right? I'm like, I've made tons of money in that account, right? It's great. It's unleveraged and it's doing fantastically, right? I'm not motivated to hit the button. So neither is grandma and grandpa. Neither is any money manager. Neither is any mutual fund manager. Neither is any pension fund. Everyone's going, so what if it goes down 5% from here? That's what everyone and their brother is saying. So we have to get behind some of these people, right, and find who's the weak hands. But until we can get underneath and actually get some down days, we don't know who the weak hands are, right? We just don't know how they're going to behave when they get underneath there. We'll find out, right? But it's a pretty record run when you think about it, okay? And so we're going to have to adapt again. And that adaptation will be the speed will increase to the downside. And we'll look at this chart, right? So we can do this, right, to get a better picture here. Here, let me post these levels really quick. Not that those lower levels matter at all. Here, we'll just do this. And post this. Just go from here up because I don't know that anything else matters on this. I'll just do it like that. And I'll post the levels if we need them later. Edit. Oh, wrong thing. Okay, so that's so stupid that people are buying here, but okay. There it's posted, guys. So my point is, when we look at this chart, right here, let me duplicate this chart. Duplicate chart. There we go. Let me park this over here on the side where I can see it. Again, tick. I don't even know that it matters. We haven't hit a 600 tick yet today, up or down. Okay, so if we do this, right, and let's just erase all these lines. Let's do this. Okay, if you look at this chart, all right, and you go, what does it look like when we break down? So what you want to do is go, we'll take just a second. We'll make it a 15-minute chart. And we will go back 300 days. see how long this takes. Hopefully not too long. And again, the straight up, I'm watching the market. The straight up just doesn't, I'm not hurt by it or interested in it one way or the other. It's just not who I am as a trader. I'm cool with everyone who wants to be long. There's no reason to think anything otherwise until it gets crushed, right? Okay, so this is a 15-minute chart. Let's go back to the last time we actually had down. So if you look over here, right, very simple, right? Forget that it's a trend line break. Everyone's thinking, oh, the trend line broke, and therefore it went lower. That is not the deal, okay? Is not the deal. So if you're looking, first of all, notice, right? See how we're about to get really wild, fat, nice trading markets? See this? See how it's getting narrower and narrower and narrower right on top? See that? Here, I'll point to it. Narrow, narrow, very narrow, almost no range, narrow, right? Dips are getting bought. One-day wonders to the downside get immediately bought, right? 50, 60s. If you look at that, assuming that's the swing low, right? See how every 50, 60 up here is getting bought? See right into the 50, 60, right in the 50, 60, right into the 50, 60, a little bit behind this time. But you can see they bought right out the 50, then they try to get behind the 62. And then you'll also see the bigger picture, 50, 60 here, doesn't get tagged. Okay, when you make new highs from whatever swing you're measuring from, that's the key. So that's this. So I know if I were sitting here talking today, since I don't know what's to the left, I'm going to assume that's a swing low because I'm not going to load more days. I'm going to go, hey guys, if we get behind here, you'll have all these guys up here trapped. What's the next clue that all these guys are trapped? So time and volume represent buying patterns and how much effort and energy was put in, right? So you can see they're pushing, they're pushing, they're pushing. And then there's a trend line underneath here. We'll just draw it like this to save time, right? There's our trend line. I should have done the other one, but that's fine. Okay, so we know that there's buyers. We know that we're trending up, and we know we're making higher highs and higher lows. And we can see that they attempted to break because you can see all the consolidation at the low, right? See how they're trying to break it, and they just get bought. So I know these guys over here need to get behind these guys because they're the last guys that tried to sell, right? And they got above and they had to come in. You have to break somebody, right? So then when you come over here and look, right, what you're going to see as we push to the right, oh, we kept making new highs, excuse me. So I'm going to have to keep extending that 50, 60 up. Hold on a second. Oh, there's where I was measuring from. That's fine. So see over here how that was my last swing low on 620 on 626 right here, right? I know A, in order to go down, I got to break this set of people. And B, this is my 50, 60 in this little structure right here. I've got to get behind this, right? So if I come over here to the right and I look, right? So notice first thing that happens. When we come into the 50, 60 retrace from that swing low to this swing high, we get buyers. That's a nice trade. It's at 73.50, right? 73.50 to 7,500. That's like a fat trade, right? And it came off the top and it came off near the back as well. You had two shots at making a really nice fat trade. Gets underneath. Now, do you notice when it gets underneath? See how the rotation's down? A, look how the velocity increased on top. Remember, this is multiple days. Velocity increased. We didn't get back to the 50 retrace on the upside, right? Every one of these days had a retest and a break at the 50, 60 from top to bottom, meaning measuring it like this, right? Well, I measured it like this. Doesn't matter how I measured it. I know because we keep making higher highs. The 50, 60 gets busted. Well, all of a sudden, right, we're not making it back to the 50, 60, right? So realize if you're looking for a short when it does break, so we can learn. You go back to 926, 10.3. A, velocity increases. B, rotations increase. C, time and trade to target increases dramatically. D, points of control shift and spread way the hell out, right? All of that increases. The time you have to make a decision on a setup dramatically decreases, right? Whereas here, we're like, oh, I'm thinking about it. With the speed that those bars go, now it's like we'll go from like having, hey, you have time, it's setting up, to that's the trade right there. That's the setup, take it. That's pretty much as long as you'll have to think about it, right? And the reason that's a problem is because people over here go, oh, I'm going to wait to get the full setup. And over here, if you wait or hesitate to get to your mouse, you just don't get entry. right? That's all there is to it. And then you have to chase, and that's no fun. B, everyone who got rewarded for buying every little 50-60 and dip back gets crushed here. If you noticed, if you were long here at 7,800, it took very few days of rip back till you get back all your profit to the left. It always happens again and again in the market, in the history of the market. This is normal, okay? Then as we rip back and you look to the right, right, see how it's wide, 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 nice, great fat trading. See that? And then all of a sudden, see right here, right? See right here? Everything changed, right? So I'm going to show that again. Look if you're zooming past here, right? Look how wide the ranges are, right? Why is that important? Because even mediocre trades get the rotation to give you the scales in this environment, right? But as soon as we get right there, that date right there, 12/11, right? Understand we have one more date over here. Excuse me, I was a little bit early. 12/27. See how, look what happened to the rotations. They went away. Okay, I want to show you that again. See this? See how the rotations over here are wide, wide, wide? They went away. And we've had this ever since with a couple dashes of a bigger rotation. See that? All shorts are trapped. Everyone's gotten very confident the market's going up. All dips can be bought, right? And we're back to, so what we're back to is this version of the cycle of the market. Now, both are very tradable. This is totally tradable. There's nothing wrong with trading this, okay? You just got to know when this happens, you've got to change your behavior, right? You can buy all the dips you want in here and probably be pretty good. Every 50-60 with a few exceptions work, right? But back over here, right, you've got to clear out and start looking for 10 and 20 point rotations for good location, because the volatility has stepped away. Everyone has stepped away from being willing to buy the quick dip. And if you keep it tight over here, right, if you keep it tight over here, you're going to get stopped a lot, right? But then when we go back over here, here's where I failed, right? So I didn't get crushed on the short side, right? We've just been grinding up, and that's cool. But I didn't get any of the longs. Why? Because I kept waiting for the pullback, right? So I got some longs. I mean, I made money through here, but nothing heroic. And not only that, but I got a little bit down because here my P&L was my record. This is the most money I've ever made in a single month, was on this rip down through here. I've never done better in my 20 years. That last quarter was the best quarter of my career, right? Well, this has been the worst first quarter of my career. I flipped back to that because what mentally I kept emotionally expecting is, give me the dip so I can get long. Give me the stretch so I can short. And it's just gone to nothing, right? We just get no counter rotation in this, right? And I've just had to say, that's okay. It just doesn't want to come back. It's all right. I know when it gets tight like this, that what's coming next, I don't know when, but what's coming next is this, right? Why? Because it always works that way. But what do we have to do? You have to get underneath and trap some people. These people who are trapped here, these are the guys providing the fuel and gals for the downside move. So when I look at this over here, right, and I do the same thing, I can just draw a general trend line under this, right, that looks something like this. I don't know why I have the habit of doing this. And now I can pull this out like this and go, oh, that's what I have to get underneath, right, to really open this thing up. I have to get underneath this group of guys and gals, right? Because until we get underneath this, no one, even when it pulls back, right, what are people going to say down here? Well, this is where all my buyers are. You think these guys are just going to disappear, right? And then the other part, if we look all the way back to that, is what started that torrent for the downside? Go look. It's almost the same almost every freaking time on a major break. Gap down and an open drive lower. Right now, not all gap downs become open drives lower. Not all gap downs become trend day down. But that one did. And what was the hallmark of that day? We could never make it back on any rotation to a 50-60 back. And even on a few days later where it actually counter rallied, it still couldn't get back to the 50-60 retrace. And that is the hallmark of a weak market, just like it's the hallmark of a strong market, right? So with that in mind, I can now come over here, right? And I can look at today and I can go with two things. A, this push started back here, right? So I can do this and go. As of now, that 77.20 has to go. That's my first clue that we're not trend day up. Excuse me, my second clue. My first clue is actually this one right here. So clue A is below 77.60. Clue B is below 770.20. Clue C, right, because I want to build a model, below that swing high and yesterday's high. And then finally, we get underneath here. And even then, I'm not done because I pretty much have to break this group of people. And by the time I get underneath here, 75.20, that's 200 points away. Now, remember, just a couple of months ago, we were getting 200-point days in NQ. So hypothetically, can we go from 77.89 to 75.20 in one day? Hell yeah, we can. Doesn't mean we will, and there's no sign that we will. But we'll know it when we see it because we'll say two things. I can't get location back for a short because all the shorts are setting up. They're not getting it back, right? And B, once I get underneath this group of people, right, we could probably even tighten it up a little bit more than that. But once we get underneath this and underneath prior day's low, and then we get underneath this group of people from the last 2 weeks or so, right, now you have people trapped and pushes back up into this area. Well, psychologically at least, right? If you bought all the way up here, all the way through here, you are the late person. You're buying today, right? And we get underneath here. So you don't have to work real hard to figure that out. What would you do if you bought the high and we dropped 200 points or 300 points? What would you do? As soon as we came back up here, I'll tell you what the hell I'm going to do. I'm going to sell, right? Why do I know that? Because I do that intraday, right? If I'm trading intraday, I sell. If I get in trouble, I sell, right? And I'm probably on the cutting edge of selling, right? Because I have a preset stop and it's relatively tight, right? It's NQ, it's 10, 12 points, something like that, right? But I know if it gets behind where I entered, I don't want to sit there. Well, I also know that the further we get behind, the more and more pressure will come on these people and they'll puke and puke and puke. And where are they going to puke to? Well, this is the last place of consolidation. And secondly, I can look for my last swing low. I eyeball it. There's no rule to it. I'm going to use this, right? And I'm going to go and measure from that low to this high, right? And I'm going to go, so somewhere between here and here, I expect a response. And then when I look at this chart really clearly, there's a huge open gap in mid of a half gap right there. And my guess is that all of it, the 50 retrace, the 62 retrace, and the mid of the open gap, all of it provides great trading location. My guess is each of those levels will give a great profitable trade, would be my guess. Okay. And so I know when I get down here, expect a response. And then the test becomes, let's say we get all the way down to the mid of the half gap. So then the test becomes this 76.20 to 76, whatever that is, 70, right? That area right there is the 50-60 back, so that if we come all the way down through here, right, I would expect an attempt back into this area, and then we see, right? It either traps back in and pushes back to the high, right? It's repaired, or it rejects here. But really, when you look at this chart, this is the most gaping hole in the whole chart and what needs to be repaired. So my guess is once we repair this, we're free to come back up, and we end up, if we could get down there with just a nice fat 300-point trading range, right? And that would be really cool. So it's not bearish if we get underneath. It just opens up the range. And in order to open up the range, we're going to have to get underneath here. And after we open up the range, we'll go through cycles like this, and then it'll tighten up on top. It'll get loose on the bottom, right? And that works perfectly. The tightening up on top gives buyers confidence to get long, right? So see how we went vertical here right before we came down like this? Everyone gets confident. Then we get loose, right? And then when we start going up, it gets tight again. Why? Because the buyers need it tight to chase up, right? They get frustrated. They can't get location. Then it opens up, down. And as long as we keep pressing highs, it'll stay tight. And then it'll open up on the bottom side. But as it opens up, right, we need the opposite effect for sellers to shake them out. So it gets really wide and fast. Why? We're trying to make people puke their position, right? So as they puke, it gives us the nice fat rotations back to the upside. And what you do in the meantime, right, if you're not, I buy long and hold for my entire day, which I'm not, you've got to wait for this to start making money, and then just realize if it starts grinding back up and they absorb it. See over here how we pushed up, and if you look back to the left here, what we really had to get underneath was this set of people to trap. We just never did. This is multiple days of consolidation, or at least under, like if I was looking here, I'd go, we got to at least get underneath this block of people. See, there's a half gap in there that didn't get tested. I'd say we at least have to get back into this to trap this group of people up here, and it never happened. Therefore, we kept grinding. So now I would say the same thing about this group of people. You're going to get underneath them. Then you have everyone trapped. Then it should open up. Then these guys. Then these guys, right? And none of that has to happen. Okay, we can just keep going up. It's law of the market, right? So that's my 2 cents. I think I covered it pretty damn thoroughly, right? There's nothing to lean on at highs here on NQ, and this is shaping up as a trend day, right? Let's get rid of this. We don't need it. Anyone have any questions? I know it's frustrating to sit here and do nothing. My style of trading doesn't work so hot. It's not that it doesn't work. I can't take the, and that's a long setup, right? On here, I'll show you ES. Right, this is this morning. Close above the last shift down, right? Long, right? Close above the shift down. Speed bar. I mean, pink bar, right? Long. Buy. Speed bar. Long. Right? They all work. They're all working, right? None of them are failing in this particular environment. Maybe that did. That would have stopped you, right? But almost everything is working. I just need a rotation down, and rotating from 29.22 to 29.20 doesn't cut it for me. Okay, and never will. If that's the rotation in ES, someone else can trade it because there's not enough juice in there for me to cover my loss, right? I'm not going to lose 4 to make 1.5. Just not going to do it, right? So I usually put a 5-point stop on this. Shit, I have no idea if I can get 5 points. It might take all day long, right? And I need to see some sellers trapped somewhere in that process. So ES, until it opens up, there's not a lot for me to do, right? But the setups are working, and they're also the best setups are coming in the first 30 minutes. Okay, there's nothing for me to be upset about. It's just not my trade plan, and I'm not ready to adjust. Number 2. Thank you. Okay. 3 across the bright blue line, right? Guys on YouTube, this won't make any sense to you, but it's a trigger. Buy speed bar, shift up, gone. 8:32 in the morning, okay? Ignore shorts, right? 3 across, right there, shift down, right? Right swing high. Again, I'm ignoring my shorts. That shift down on a purple bar is usually money, not here, right? So I got to lay off the trade, right? So what's going to happen? I'm going to miss the first rotation down. I don't give a shit what anyone says to me about how great that setup is. I don't care what kind of divergence, and we are getting divergence, right? You can see it. Look at the delta drop, right? But we're also getting no sell pressure either, right? So this push up, by the way, right here, that biggest rotation, right? I know at least this was the last strong attempt to sell, right? I can pull that in and look the last couple of days. See how that's the last push to the downside since yesterday at 9 o'clock, right? So when I open that up, I know, hey, they pushed pretty damn hard. Well, guess what happens if we get over this guy, right? This is a decent delta rotation down. They're going to cover. That's what the hell they're going to do. So B, I want to get underneath this rotation off the top. C, where's my biggest rotation up on the day, right? Multiple ways to look at it. So from this perspective, got to get underneath this anomaly. There's another little anomaly right here. And my biggest rotation up from a delta perspective is right here. I know I have to get underneath, as of now, this block, right? I know I have to get underneath this block, right? And now this all coincides, right? Shifts underneath this block, underneath prior day's high. Now I have targets below that are light blue. I can actually trade through those areas, right? Let me do this real quick. There we go. Now I can actually know that I could long liquidate through these areas. So in my head, mentally, what I am doing is going, I know, so I don't get pissed off or frustrated or go, damn, I knew it was short, right? I'm going to say in my head, right, and write down on paper, my shorts are going to be incredibly difficult at the top, and tops are hard to trade. Now, that's easy to say if you're a good trader. All you have to say is that. This shorts, forget them and pray for a dip, right? Because that's what you're looking for, right? But the other thing you have to say is it is going to break. It will break sooner or later, today, tomorrow, next year. Somewhere we're going to have a big down day, right? unless it just doesn't go down anymore, in which case we're all out of business anyways. Because eventually, even if it dies on the intraday time frame, eventually everyone will agree that everything's just perfectly valued and there's no sellers, right? And we will stop going up and we won't go down, right? We'll just sit there until someone finally blinks. Enough people blink where we get some motion, right? But B, when it does break, they're going to hit the exit doors. I'm not going to get retraces back up to key locations because they're all going to hit at the same time. So what's my choice in that situation? My choice in that situation is, right, either get very aggressive on my entries, keep fighting it all the way up, or go. After the initial break, I should get my short setups. And these setups, so see how these setups are all failing right here, right? Short, this one worked. Short, it only worked for a couple of ticks. Short, stopped, right? Because they're trying to pound back in underneath that swing high, and they're not done yet. That's all there is to it. That's 3 across. Get above the shift down, it should push out again. Okay, and we know that it'll probably push into London close because, hell, that's what it does, right? So those same setups, right? Particularly the 3 across with a shift down, that's usually money, right? So go back a couple weeks ago, all right? 3 across, followed by a shift down, and off it rolls to the downside, right? 3 across, we can't see if there's a shift down there because it's covered up. I'd have to look, but my guess is, and there's not a shift down here. Let's see. 3 across right here, right? 3 across, shift up, followed by the shift underneath, backside test, roll, right? My whole point is when you look at this, right, and you progress through the day, right, and you're getting these moves across, particularly if there's a shift down, like here, 3 across, and you're looking for the short. So I'm going to assume that you're looking for location, right? 3 across, speed bar, shift down. Those are usually money for the roll, right? You put a stop just above the fractal, right? And you get the roll to the downside. And same with the longs, right? 3 across, shift down, shift up, push, right? It resembles, right? Now, what it resembles a two-sided market, right? All of this resembles a two-sided market. When I get 3 across, and then my first shift up when I'm aggressive out of key locations, I'm long that bar, right? And it rips. When we're getting 3 up, shift down, I'm aggressive on that short, even if I have to cover relatively quickly, right? 3 across, shift up. I'm usually long on those setups, right? And I'm usually getting paid, right? Even if it's just 5 or 10 points, I'm usually getting paid on those, right? So I get 3 across, shift down, purple bar, short market as much as I freaking can get onto the trade, right? In that little area, because I know I'm about to get a big fat rip to the downside, right? And I have no fear of shorting because we actually have a two-way market, right? Well, right now, you take those setups that work beautifully, right? I'm getting 3 across, shift down, right? My stop would have to go over here, but I have no assurance, right, that we're actually going to roll lower. So I don't want to fight up here. I want to let them break this, get past this, get past the 50, 60, and then on these setups where I get 3 across, shift down, purple bar, hell yeah, I'll dial up as many contracts as I can get in because I know I'm about to get 10 to 20 points or more on NQ, but I need to visually see it, right? So my two choices are take the setups and accept the stops, right, and just go, I'm just going to keep pressing the short and I'll stop until I stop, or better choice, wait till it comes back, fails on the 50, 60, and take the counters back up and then take your short setups. It'll be a lot easier at that point, right? So you don't just get caught in this sideways consolidation, right? So that's my trade plan. And until then, odds are every long will work until it doesn't. But for me, right, for me to be comfortable in a long, I want to see rotations down. I want to see the ability to trap sellers somewhere in the delta where someone pushed and got above like this. If this came, but let's pretend this. Let's shift this from here. Let's shift this down here. And let's put the top of that rotation right here. And then I get a shift up above. Yeah, I want to be long right there. Why? Because I think I'm going to push back to the 50, 60 or the high back above. And I want to be long on that trade, right? But until that happens, I just emotionally, mentally, and structurally have a hard time just taking the new highs and going, yep, we're going to keep going. If you don't, right, take the trade for God's sake, right? If that's your trade, take it, right? Just know that's your trade and you're taking it and know that this will change again, right? And that's the important thing. Most retail traders who are trying to learn how to trade because they have small accounts and because they were doing it, quote, for a living, right? think that you have to be able to make money every single freaking day of their life. And it is a formula for getting blown the hell up, right? That is such a powerful bar to ignore that. See the shift down with the purple bar, but it's just too hard right here for me to take it. I know it's good. It's just too hard for me to take it. Just know everyone makes money day trading. Also, almost everyone gives it all back. So your question isn't, am I making money now? Because everyone finds a market they can make money in. Your question is, how do I not give the money back? All right. And if you have to make a trade every day because you're making a living and you're sitting in front of your computer, those are the people who most likely give all their money back. People who go, I know what my market looks like. And when I get paid, right, they just look at this and go, so they're pushing and so what? I'll get my market back. And I'd like to fall into the second group. Also, for those who are arguing on CL, I've said this time and time again. I had the conversation again yesterday with, I'm going to put this down and back up. Oh, wait, that is, yeah. And we still don't have a down bar with a point of control underneath, but they're trying really freaking hard. See how they got the point of control right above there, guys? So we need a down bar with a point of control underneath, and then we got to bust this. On CL, I'm going to go to the 7 range on CL, right? So I had someone yesterday upset in the room that they didn't take this short. Was it short? Sure. It set up short right at the end of the day, and they did some profit taking back to the 50-60, right? For me, and as a trader, I'd be more upset that I didn't look for longs on dips in a market that's straight up. Oil is a single commodity. It's not composed of 100 companies or 500 companies that are having earnings. That's controlled by sovereign funds, large institutions, and hedge funds and producers and refiners, right? It is a product where there's deemed that there's a lack of supply or a dramatic increase in demand, they can keep driving it. It does not have to be a truly two-sided market where there's a give and take or it's extended too far or it's overbought or any of that shit. Okay. If ES and NQ can go straight up, CL can go straight up and straight down. It is a common misconception of people who trade CL that there has to be a reversion to the mean, a retrace, test prices lower. It's all bullshit. It doesn't. It can go in a straight line. Okay. So in this particular environment, the same rules apply, and you get to see a change in the attitude of the people who control it. The people who control it are not you and I. It is, again, I'm going to say it, sovereign funds, hedge funds, mutual funds, pension funds, producers, refiners, and drillers. That's who controls it, right? And what they are trying, and they have the inside information, most part, because they know the supply pipelines, and they actually know what's going on behind the scenes. Right now, they get it wrong sometimes, right? They may get it wrong a lot of times, but they have the money, and money drives this, right? And if there's no sellers and there's a boatload of cash trying to buy it, it can keep going. So if you look through this and you look at all the shorts you could have had, the frustration is, right, if you don't catch this move up, all you're left with is looking for the short. So you go, this time it's the short. And you're right, you made a couple shekels, right? And that's great. But damn, off it pops back to the upside. For me, right, what I'd want to look for is the long setups, and I'd want to press those longs instead of fighting for the short at this juncture. Now, as everyone knows, I'm totally willing to short CL, right? It is working short side, right? So you can see how we get the shift up, double shift down. We get those double arrows. That's very powerful, right? You get the 3 across, you close underneath, and down it rolls. I'm not saying that the short can't work, and I'm not saying that getting it from 66 to 65.50 is not a great trade, because it is. What I'm saying is if you sit here and you go, I finally have got them, and they're going to roll it down, that is the low odds trade, and you better be covering. And the pain in the butt here is on CL, because the buyers are so aggressive, they're not giving the reversal sign off the low. And if you look, it's the same concept here, right? Biggest push down, you draw a line across that biggest push down. So when I know that it's pushing to the long side, I don't go, I'm going to wait to get above. I'm going to go and look and go, shift down, purple speed bar, shift up, right? So just like I got smoked yesterday, not waiting on NQ to the short side, right? I'm going to be aggressive and take this, because otherwise my next entry is all the way over here. And there's nothing wrong with this entry. You're above your last set of sellers. This shift up almost always works. It's an okay location, right? but I'm going to try and be aggressive down here, right? And there's two reasons for it. They came back against it. They got to shove across. You got to buy speed bar, right? Followed by a shift up. This buy speed bar followed by a shift up is pretty damn powerful, right? I want to say it again. The sell speed bar followed by the following shift down usually works pretty damn well. And the buy, when a little buy appears, and it's the speed bar, again here, speed bar, the shift down is what's triggering the rotation lower, right? This is a pretty damn good setup. But I know if I'm in this, what I'm hoping for is to get above this point right here. And when I do that right here, what I want to do is go, I'm with the trend. I'm above my last seller, and I want to take my hands away from this trade because now I know I have the ability to push. So that being said, I haven't caught that many CL longs either. I should have caught more than I have, right? And I'm working on it. So the market's just in a cash flush, straight up push. And when that changes, we will all know it. But these set of trades, right? So I'll show everyone where my stop was on NQ yesterday because I would take it again. If I open up, come back to that dreaded, I want to say it was the double shift up. It was right here. See that where we got the double shift up? And so here's what happened. Because I was trying to be conservative, I didn't take the first shift. See, that's 3 across, shift down. I should have shorted right there. Had I shorted there, I got a scale. What I did is I waited for the second shift because I wanted to get underneath this guy. So if I was going to correct that, and if I was going to take it today, I have to take this bar, not this bar, because the second shift is getting bought, right? This is where I got stopped, right? And so if you look at that today, if I apply that same notion that I'm willing to attempt a short, right? How did it work? So number one, what do I need? I'd like 3 across and shift. That happened right there. That worked. Lesser setups, okay? Shift down, paid, shift down, stopped. So just go through it, right? Because you got to figure out what you want. Shift down. If you took 4 points, you did okay. Otherwise, stopped, right? Shift down, paid, shift down, paid, shift down, stopped. Well, wait, depends on how you use your stop. You need to use the anomaly up at the high there. I mean, the fractal at the high for the stop. So actually technically paid. And then shift down, 3 across, shift down. That's a pretty money trade, right? That gets us underneath. Now we got to find out if we get back above the swing or not, right? And then that's 3 across, shift up. So if you're bullish and you think we're going to go set 8,000 record, then that's the bar you're buying, and that's your stop right underneath. I don't like either trade here. I don't like keep buying long when it's up. So again, what's going to happen is I'm going to go, hey, that's 3 across, shift up, and that's usually pretty money. I'm not taking it. Why? We're back underneath the old all-time high, right? That's what that is, that red dotted line. So what's going to happen? If we do this, right, I'm going to go, oh, I should have taken the 3 across, shift up. That's usually money. Why didn't I? Because this is a cross. Okay, well, shit, that sucks. And that's that. I wanted this setup to come over here, right? Like this, right? Speed bar, shift up. It's not 3 across, but that's still a pretty solid setup, right? And that gave me a scale if I wanted to take that, right? Where that's nothing to sneeze at, right? You're essentially 7790, 7790. Let's call it 7789 to 7794. Gave you a 5-point scale. Not fantastic, but if you're bullish up here, which I'm not, right? That's the setup. It paid you, right? This is the worst. There's no speed bar. It's just shift up, right? It's just shift up. It's just shift up. But even mediocre trades are working in here, right? Again, when there's no extension down and you're getting the shifts up, you're asking for an ass kicking. That's all there is to it, right? And normally a double arrow like that with a shift like that is freaking totally money. This speed bar, purple bar, shift down, totally money. Hard to take right now because you're not getting the extensions lower. So that leaves me in a little bit of that leaves me in a place, right, where what am I asking for from the market? I want to see a change in the way the market's behaving. So I've got to write in my notes so I don't get to 12 o'clock and I'm all pissed off that I'm going, well, I chose not to take this, and now it's shifting up like this and running. And what's my choices there? Well, there are no choices there, right? I want to say that again. There are no choices there, right? There's nothing for me to do in that case because if I go long here and I get stopped, I'm going to go, damn, I took a long right into the prior old swing high after trapping underneath. I got stopped. That was stupid, right? If I go short here, right, and it stops me, I'm going to go, damn, I took the short right in front of the prior day's high. So what do I need to take a trade, right? What do I need to be comfortable? I want to get all the way up here and maybe pull back a little bit and go, oh, there's a 50, 60 back, 3 across, shift up, I'm long, right? Or I want to get under here. Give me some kind of pushback towards this area, 3 across, shift down, and now I'm short. And now in both of those locations, away from the area where every retail trader and their brother is trading, all right, and away from the chop, I get good clean entries with no conflict, right? If I short here, I'm at an anomaly. I've done an over-under. I've got people on top, right? I've gotten underneath my last sell wave, which I was unable to do before, and I have a clear target lower from 77.67 down to 77.40, right? And I know if I can get underneath 77.40, I have areas I can break to the downside. And if I get all the way down here, I know I want to be long at 76.50 area for a push back into the 77.20 area, right? So I know what I'm looking for, and now I just have to be man up, right? Or woman up, whichever way you want to use it, right? And go, okay, I'm just going to have to wait till they give me the setup I want so that I'm willing, right? The last piece is, right? What's the last piece? And if you haven't read Annie Duke's Thinking in Bets, right? Thinking in Bets, right? The easiest way to find out whether someone's willing to do something, right, is go, want to bet, right? Remember when you were a kid and someone said, you know, I can kick your butt if you're a boy, right? And the other boy said, no, I'm going to kick your butt. And the other kid will go, you want to bet? And he launches a punch, right? And they start fighting. Sooner or later, one of those two kids is going to find out whose butt's going to get kicked and who's going to win, right? When someone makes a bet, someone says, the Dallas Cowboys are going to win the Super Bowl, right? So that would be a buddy of mine, right? And I look at him and go, he says it every year. This is the Cowboys' year. They're going to win the Super Bowl. And I go, great. I bet you $5K they don't make it to the Super Bowl. Forget they win it. I'll just bet they don't make it, right? They get in, you win my $5K. And every time he goes, nah, right? He doesn't have very high confidence on that, right? He's all full of crap, right? Right into the point you go, here's $5K. I bet you they don't make it to the Super Bowl. Okay, so what you're doing in this market is you're gathering all your information, all your setups, the algo, levels, price action, combined with your read, right? And then what you're saying to the whole entire world is, like, let's say for whatever reason I wanted to short this bar. I'm saying, I bet we get an extension away from this bar to the downside. And what am I willing to bet? Well, if it were me, I'd short right underneath it one tick, and I'd stop, probably about right here, right? That would be my bet, my quote bet that I would make, right? Just like over here, if I was willing to short, what I would have done is I would have said, here, let's do this one more time. It doesn't matter whether it's CL, NQ, any of it, right? Think of it this way. What you're announcing to the whole world, whether you're putting it on Twitter, StockTwits, or Room, or just by yourself, right, is I go, hey, that's a high odds setup, right? And what I'm saying is I bet if I short right here that I can get it down low enough to get a profit, and my stop either has to go right here or right here. Choose your poison, how much you can lose, right? So there's an art to figuring that out. I probably would have put it right here because they're so close. I don't want to get one ticked out, right? That's what you're saying is I bet, right? And then the stop is saying that's how much I'm willing to bet, right? And then your emotion is saying, right? So now let's take it to another extreme. Back to the Dallas Cowboys. The guy is such a big Cowboy fan, right? Not only is he willing to bet $5,000 that they'll go to the Super Bowl, now he's willing to say, I'm willing to bet the Cowboys will win all their games. So every game the Cowboys play, I go, great. I bet game one they lose $5K straight up, no spread, right? $5K, and then he loses the first game, right? And he goes, well, they'll win the next game. I'll do another $5K. There's another $5K. Cowboys lose again. I bet they'll win the next game. No emotional control, right? Because he's making all those decisions based on some feeling that he has about the Cowboys winning, right? Nothing else. Okay, so what you are doing is if you're shorting this and that doesn't work, and then you short this, and then you short this, and then you short this, and your whole feeling is, hey, it can't work, right? So if I'm on Twitter or StockTwits, I can go, boom, 77.94. It's a 78.6254.321 extension. That's the top, right? Well, on Twitter, it doesn't cost me shit to put it on Twitter. No one, it's free. right? I can have the opinion, and if it goes down, I go boom. And if it goes up, I just delete the tweet, right? That's easy, right? What's hard? Okay. What's hard is going, I think this is an area where it's short. How am I going to engineer that trade, and what money am I willing to lose to do it? So now you start breaking it down into real terms, right? Potential head and shoulders, potential, not drawing it out perfectly, right? We've gotten underneath our last push up. See this right here? That's our last strongest push up. That comes right here. But it comes above the old swing high. Now I'm about to get my first shift down underneath the old swing high. So now maybe I have a trade here. That will trigger, thanks to our range bar predictor, at 77.28. See how it went away because it didn't shift, right? So now if this will print, now it'll be 79.50. Where does my stop have to go? 77.88. So let's say that printed, right? So here I will actually take that trade, okay? So what I'm saying right now, so market. So what I'm saying, hold on, I got a few more off. Come on, green thing. Okay, so I am now short right here above the anomaly, right? So let's just walk through the whole process, right? So I'm short at 77.79 3/4. Stop, right? I'm going to add some here in just a second, but the stop, right? I don't want it above that fractal. So where am I going to put it? I'm short at 77.79. I'll just put my stop at 77.90. It means that I have to get above this and this, right? So it'll be just over 10 points. Let it go over here, putting the stop at 90, 90.25, and 90.50. Okay. So now what have I said to the whole wide freaking world? I've just said, I bet, right? I said, I bet, A, that we're going to hold underneath this guy right here. B, I'm taking the first shift down underneath, right? And C, I am saying, even though I know we're in a strong uptrend, and I do, right? Even though I know we're in a strong uptrend, I am willing to bet that that is going to come back down and test this location over here. And where am I willing? What is my bet? My bet is per contract, roughly $220 per contract is what I'm willing to bet. And that's what I'd like to get. My scales will be, because I know there's probably buyers sitting right here, right? I have to think it all the way through. I bet here, right, on this shift down. So what am I betting? I've gotten underneath. I've gotten a shift down. Do I have 3 across? No, I'm actually betting that we're going to break this 3 across right here. So what am I leaning on? I'm leaning on the fact that we're underneath this last push to the downside. And then what's my other issue? It's 10:06. So I'm going to have to hold my breath and go, please, Lord, don't let them drive it up into London close, right? Let them take profits into London close. All has to be in consideration. But at the end of the day, right, I just said I'm willing to bet, right? My average now is 77.80, 75, by the way. I am willing to bet that this will break because we're underneath here, and I took my first shift down underneath this wave, right? Under the wave. See, this wasn't under the wave. This is under the wave, right? So now what do I have to do, right? Now I actually have to get them to sell, right? So I'm not going to pin on a lot of size on this trade because I have no evidence of that, right? So I'm just taking you through the thinking process, right? I wanted to get underneath my last set of buyers. I've done that. I wanted to get a shift down underneath the prior high. And now what do I want to do? I don't want to shift up above here. I don't want it above 77. Actually, I need to make sure I'm correct on this. Hold on one second. Anomaly, 77.87, 77.91 You know what? You got to move the stop to 77.9250, guys. I apologize. 77.9250. I need to adjust here real quick. So it's almost a 13-point stop now, right? Actually, a little bit less. It's 12.25 for me, okay? And I'm saying this shift underneath, right? So now I've got to think, well, where do I want to stop this? If I get a positive bar with a point of control above, is that my stop? Is this my stop? Is this my stop? Or is it the whole thing my stop? And then I have to size correctly, right? But what I'm saying to the whole world is I bet. Shift down underneath the biggest wave, right? I don't have 3 across, but it's my second shift in this series, right, as we've been pushing lower. And I'm saying I bet I can get a 5-point rotation at least down into that 77.72, 77.76 location. That's my I bet scenario, right? So, right, and this is important, right? If you're not willing to say to the whole world via your money, I bet, right, then you have no business taking the trade, pure and simple, right? You should go, no, I don't bet. I think they're going to drive it up right into the London close. I don't give a shit what my symbols say or my little algo says or anything else. You're saying, no, I don't bet. I don't agree. I don't think it's going lower. As a matter of fact, what I'm looking for is shift up and drive right into London close. So now you're looking for a different setup, right? You're looking for a push down, hold above, shift up, and run, right? And get above your last set of sellers, right? That's the bet you are willing to make, right? So either way, I'm small size, right? I would not normally take this trade except that I wanted to show the thinking process. So the thinking process is I bet, shift down, underneath, and we're going to hold underneath this wave. And where would I grow concerned? Well, now that we've had 2 shifts down, I know it takes a lot of energy. I really don't want to close behind this. If we close behind this on a shift up, I'm probably screwed on this trade and I'll take a stop. Hence why I am small in size, right? Because I already know that they're just not releasing it. And the odds are that this was a trap. They're going to get above it, right? And they're going to push. But that was the setup. So I want to be clear. Every time you make a decision, you are deciding how much you're willing to pay for that decision. And we're expressing that opinion, right? We're expressing that opinion in a series of bets. So see this shift up right here? That shouldn't have happened. What usually happens is it shifts and it just keeps going, right? So the very mere fact that I got this shift right here is a problem. It's a speed bar shift on top of that, right? And it's pushing back up into this location. So we all know they're probably going to push into London close and I'll get stopped on it. It's so small, I don't care about it. It's sub 10 contracts, right? But I wanted to express how you express that thought process in trading, right? I wanted to express how. Now, normally, I got to tell you, this setup underneath a key location with a shift down like that, that first shift down and that second shift down is money. It's just this particular environment where it's killing traders, okay? But like I said, even a week ago, this was a total money trade, and it usually would go down for 10 to 15 points, and then you had to cover before it came back up on you, right? So my bet is 77, 92.50 because I wanted to be behind this anomaly, right? And that's where this trade will stop out for me. And my guess is just due to the current environment that we're in, they're going to come and take me. But I wanted to express how I can do that trade. Now, for the other person, if you get 3 across, shift up, and your stop's underneath here, right? And that's your bet, you're still alive, right? You took the trade here, your stop was underneath here, and you haven't gotten underneath this point. And so you're like going, no, here's where the launch point is into London close, and they're going to rip you a new face, Simon. And I'd be like, okay, I see your setup, and you're betting we're going to hold above the prior high. And I'd go, sure, no problem, right? I'd have no issue with that. It wouldn't upset me. I wouldn't think it's a terrible trade, okay? So that's how that thought process in general works, okay? And that's what you have to distill your thinking process down to if you want to be successful in trading, and then you don't keep reloading the same trade over and over, right? So we all know they're probably going to run that up. I'm totally fine, which is why I said, right, I'll take it to demonstrate. That shoved down, and now look where we are. This takes a lot of energy. This got them above. I didn't want to see that shift up. And then what's the last piece? I don't move my stops, guys, okay? Even though I know this is likely to get stopped, why? Yes, it'll work here and it'll save me a few dollars. The trade's already small as is, right? But there's a but to it, okay? But when I do that, right, meaning when I move my stops, more times than not, it costs me money. So I simply have to decide whether I'm willing to take a short or not take the short. But jumping back and forth here and going, oh, I'm going to stop here, and then it gets underneath, and I'm going, oh, I want to be short again. You end up losing more money than just putting the stop on and go, that was my setup, I'll take it. And if it fails, so what? And realistically, when I look back, I'll go, should have shorted there instead of here. And that's okay too, right? It's really all okay as long as you don't blow yourself up in the process. Whatever your thought process is, it's okay. Okay, and what do the longs need in order to make this work? They've got to get above. The longs want it above here. The shorts want to hold it below here. These are equal, and it'll work out one way or the other, right? And in my case, they'll either get above here and stop me, right, and break out and push to the upside and continue to trend up, or they'll get back underneath right? Or I won't get stopped. They'll get back underneath and it'll push to the downside and they'll long liquidate it somewhere in there. But I don't, just so anyone who's following me on YouTube, I don't move my stops. If you're not going to use the stop, just don't take the trade, would be my suggestion. Because you look smart one time and you look really stupid a whole bunch of other times, right? Because it just freaking bone crushes you. So, and had we rolled down and this had been the opposite, and this had been from a big rotation down into a key area and I got the setup, I have no issue taking the long, but not from 92 to 80. 12 points on NQ is nothing. I know it's working right now. I'll let someone else be the genius with that. Doesn't work for me. Okay. Anyone have any questions? And then we just sit here and watch. Probably me get stopped on this trade, right? So that is my 2 cents about that. I don't have anything else to add. They can do whatever they want to do until London close. I have no control over it. Anyone have any questions? And this is why shorting is so freaking difficult, because like I said, even a week ago, that was total money, not so much anymore. And the earnings have been good. All you heard about a couple weeks ago is how bad the earnings are going to be. Everything I'm seeing is pretty good, actually. No one's missed, as far as I can tell, that's major. So anyways, that's my 2 cents. There's NQ. My stop is right around the corner, and it's almost certainly going to stop. Everything, including CL and ES, are pushing to highs, right? And I'm all right with it. So anyways, that's my 2 cents. 92 to 93 is the stop all the way across there. And at this point, you'd pretty much have to guess they're going to jam it. And that's why I was saying, right, pick which side you're willing to trade on. And that's that. Any questions, guys? I think I explained it pretty well. And let me spread this out. And yeah, it's just a clown market, but what can you do? It'll be interesting to see on this push if they don't break it, because you're now pushing this rotation up. See how big the delta is there? So ES is not a problem, right? It just broke, actually. That's the problem right there. That wave, they need to break the high on that wave. You get back underneath that wave, again, big push, failure to break the high, get back underneath the 77.84, and the story changes. Here comes my stop. That sucks. I probably should have used another example, but I don't get down low enough to get a long. And you have to just be impressed by the straight upness of the market. And Bill, I'd be interested to see what your part of the if you had any conversation, if you said you sent anything here. Where the heck is my control bar? There we go. No one said anything. And here comes my stop. So again, the stop's all the way from 92 to 93. Just kind of layered it out there. And I'm sure they get it at this point. So see that right there? Fantastic. Fantastic setup. Shift up, double shift down on that. That is usually totally freaking money on that trade. I'm just not willing to take it for the same reason I'm about to get stopped on this, right? It just doesn't ever work out for me. I haven't gotten it yet, but it's coming. For the long, Bill? So Bill's saying a spring set up to the long side on NQ. But what about the biggest wave up getting underneath it? I don't disagree with you. I'm obviously going to get stopped on the trade. So there's one. Let's go ahead and finish it. 92, 92 quarter, 92.50. All of it got taken. There's 93. That's freaking awesome. Bill, right? So I'm with you, right? But what about this, right? So there's the biggest wave. Up to that point, that's the last biggest wave up. So I don't have a problem with that, right? But there's the biggest wave down. I see that. If you get above it, I know they'll push, right? Plus the environment, okay? No issue with that, right? But here's my question. I can show you a million examples where you get underneath that last push, you shift down underneath it, right? And it rolls. Now I understand the environment, right? So I got it. Okay. And I agree with you. And that goes back to, am I willing to move my stop? And I'm not, because it was a horrible habit when I had it, right? And I'm simply not willing to do it again. That's all there is to it. Flat out. Not willing to start flipping my trades at all. Not willing to start moving my stops. I don't care what I see. It's a horrible habit. It costs me more money. I know. I saw that they flipped it around right here. I'm not willing to move my stops, period. You can if you want. And I know you're not arguing that I should. Anyone who wants to do it, be my guest. It's a horrible, horrible strategy. It will cost you money every single freaking time, and you will regret it, right? It may work right now and you'll feel smart, right? But your money is made and lost at the decision point, not after. By the way, we're at the white zone, that big anomaly up on CL, right? So that whole thing is a valid resistance point all the way from 66.60 to 66.80, right? That was the target up, right? We traded through for the auctioned area, rejected from the top, pushed above. That's the target for rejection. And that whole thing from 58 to 85 is a valid resistance area. Again, there's just nobody selling, right? So what are you gonna do? Look at the tick is non-participatory, right? There's nothing on it. There you go. Plus 600. I don't even know why I have the thing up. It doesn't even mean anything anymore. As a matter of fact, I'm taking it down. It's just annoying to look at it. London close in 9 minutes. We find out what's what. So again, notice how I didn't get pissed off with the stop. I just knew it was coming, right? And I knew from earlier, hey, I'm taking it. Why did I take it on tiny size? Because it ain't freaking going down. On the best setups, it isn't going down, right? So let them run with it. We'll know when it changes, right? We will know when it changes. And if you want to keep buying high and higher, right? So like Bill said, the long setup. Okay, well, I don't disagree with Bill, right? But shit, you want to buy this straight up? On the 600 billionth day, I emotionally can't bring myself to do it. And so I'm not going to do it, right? But if you want to, it's all you. It's all good. I have no issue with it. As for me, I will wait. The crush of the shorts. And this is why you can't get emotional about it, guys. If you get stopped, you get stopped, right? You don't reshort. Oh, I got stopped, reshort, stop, reshort, stop, reshort. You don't know, right? I think it's ridiculous, but no one cares about that either. 6 minutes till London close. Watch, oil can be highly volatile in this situation. Wow, what a nice move. My hats are tipped to all the longs who got this. I did not, and I traded 99. I did not see this coming. But it's a beautiful move. Anyone would have to agree. It's out of control, but it's a beautiful move. The definition of a short squeeze. Biggest wave. You get underneath that wave now, guys. Watch for the roll to the downside. On CL, the break would come from a bigger, slightly bigger time frame. You have to get underneath 66.20. Start getting it to loosen up if you're going to see a pullback of any sort. And on ES 29.24. Shift underneath those locations. All right. Shift underneath this now. All right. Again, shift down underneath this wave. Open us up to the downside. I'll be right back, guys. Excuse me. Very interesting here. 2 minutes to London close. A buy speed bar at the top. I so want to short a shift underneath this. I cannot tell you how rare that bar is right there. Oh my gosh. Okay. Wow. Sometimes you just wish. There's a ton of size underneath on the CL dome. A ton. And that usually means they're going to sweep them. Just FYI. So watch. Let's see if this breaks. See that? This is how that's supposed to work. Purple speed bar, break, roll. You need to shift down over here somewhere. That is how that is exactly supposed to work. Let me show you all that. Okay. You got it on both bars. It came on the 7 range here. Buy speed bar right on the top, shift down. That's usually totally money, right? So I'm looking for my next shift. I'll probably take a short on CL if it sets up, just FYI. See that? That was on the 5 range. That's on the 7 range. See that? Buy speed bar. So now see this right here, buy speed bar, shift, roll, buy, right? Now I'm looking to see if there's your 3 across. If I can get a shift down on that, probably going to take it small size again, right? As extended as it is. I understand, and I'm doing this under context, right? So understand, context. We're all up, right? I just know this is all poorly auctioned. Biggest wave, buy speed bar right on top, right? If I get a shift underneath this guy, right, I'm probably going to look to try to short it, right? Now, what do you make the decision if you're following Simon? Well, Simon's shorting straight up market. He just said how hard it is, right? I'm cutting my size dramatically, right? Way back, okay? So now you have to decide, right? You don't want to follow me blindly. You want to go, do I want to do that? Or do I just wait for another day where I actually see the downness? And you make a trade. Or maybe you're a 1 or 2 contract trader and you can't cut the size. Well, then screw that. Don't take the trade. You need it to be given evidence that it's already doing it. That is a perfect setup, guys. I cannot tell you how good that is. How good that setup is so money. Shift up, purple bar down, shift down, backside test, roll. And then it confirms over here, pink up, there's your pink bar, there's your purple shift down, see ya, right? Now, remember, the extensions haven't been very good to the downside. Daniel, did you take that? That's your setup, brother. I want to get underneath this right here. Take the trade. I do have my eyes very closely now on CL, guys. Looking for the setups, both long and short. You still have to get underneath to break this thing. 66.18, underneath 66.18, and there's actually quite a bit of room to roll to the downside on CL. And B, you have to get people to actually be willing to sell. That is a perfect top formation, by the way. It's hard to keep taking your shorts when you're getting stopped in a market that keeps going up, even if it's, you know, that it trades 2 ways. Remember, this is the mid of a half gap right here, and that's the zone above, right? And if ES is only up 20 points, so it's up good, but it's not extraordinary. And that's also a 50-60 back from the last swing on the 7 range. So be aware someone's going to try and buy that, or at least they'll try. So you got this. I see how they're trying to hold that, but that's the small. But from the big one over here at 748 to this is what has to go right here. That's 66.10, 66. That's the 62 retrace from the swing low up. And then the other one from yesterday's low, approximately right here to here. Oops. Here to here. And that's a bigger picture, 50-60 from yesterday's low. So you got to get behind that 66 is basically, long story short. You got to get behind 66 to see a real long liquidation. And then obviously you have a ton of people trapped if you get underneath this whole structure, right? You have almost 2.5, 3 days worth of people trapped. Bill, any thoughts? Anyone, any thoughts? And now we just kind of cruise through and wait to see if anything develops. It could be tearfully slow. If you don't get the red down arrows, there's absolutely nothing. You got to get behind these guys on these shifts up, right? Just like say it's shift up, shift up. We finally got behind those two, and that's what rolled it. Same thing, right? So if you look to the left, see how there's nothing to get behind and they absorbed it. So now we got this is good. I'd want to get behind this personally, right? With the proper structure, meaning the proper sequence of algo triggering. If I was going to even remotely attempt it, and I am going to attempt it on the last trade was basically less than quarter size, way less, and it'll be the same thing again. It'll be 10 cars. So I'm not willing to lay much on the line here on the short. Now, after it breaks, yeah, I'm willing to do it. See the blue zones? Okay, they are anomalies. See how someone tried to sell it right there? Right? There are people, but it can get traded through very easily, which is why it's blue. See, all shifting down again. Very interesting. Hope that gives me another chance. Which it always does, long or short. We're coming down to the bottom of the last major push up, which is at 66.18 off the 7 range measurement. Has to get underneath that. I'll probably take the first and the second shift down underneath there for a continuation pattern with pretty tight stops, or wait for the other choice B is wait for the rotation up, get a shift up, then get the shift down behind the shift up, and take that, one of the two. And notice how from the 5-minute structure, right? So right to the white zone, right out from the white zone. So if you just trade the zone by itself, you did well. It's really hard when you're trading NQ and ES and NQ and ES are on rails to go, oh yeah, I'm going to short this. Or when this is just on rails to go, yep, that's where I'm going to short it. But the zones do, I mean, there's a reason why they work effectively, right? You can even see this morning, yellow zone, backside test, push down, got above, quick backside test there, pushed. And I would expect an attempted responsive buy right there next time in. And this is vulnerable to getting swept if we get down there. And now we're coming to backside test that blue area down to the prior day's high, poorly auctioned. And you can see when I first tag it, it gets a response almost immediately, right? And so you have to have both time frames up to make it make sense. And in the meantime, higher on NQ. But now imagine, go back and say I had no discrepancy in figuring out how to figure out my trades, right? And I get emotional about not taking my trades, and I'm willing to take, I think I got smoked on this shift just like yesterday, right? And I'm not willing to cut my size, and I'm getting mad because it's going straight up, and I go, but this is a resistance zone, right? So I go, but that's resistance for whatever reason. I'm going to short it, right? 3 across, it has to work. I get mad, and I keep shorting and shorting and shorting, right? Not looking for any excuse, and I get on tilt. This is how traders get on tilt, right? So what you have to do, right? What you have to do is be willing to go, oh, I made a bet. I made a public proclamation. I'm shorting wherever I shorted in here, 80, right? I'm stopping 90, 92, whatever it was, right? Once you make that public proclamation, right? Imagine people watching you, because people are watching me. You don't want to look like you're totally insane, right? So don't go, I'm shorting here. Oh, it stopped. I'm mad. I was wrong. I can't handle it, right? You're wrong here, 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 because you're trying to make it all work, right? And that's how people go on tilt all day long, right? I got it wrong, but I had the setup correct, right? And as Bill pointed out, and then when I journal about this loss, right? So I'm going to point out what Bill pointed out very accurately, right? And what Bill said was this. What Bill said was, Simon, if you get the shift up over these last 2 shifts down, it's most likely going to rip the other way, right? And that's true. But I already decided that this right here, this 91, whatever it was, that was what I wanted to stay behind. And you could have said, so then you go through the whole check mark. Well, I could have used this as a stop and used the tighter stop, right? And that's all very true. I could have used this as the stop, right? Oh, yeah. I could have used this as the stop, right? But let me tell you what happens. Okay, so let's go back to a time where the market actually went down. Any time that it went down. Okay. I need an example where it was actually pretty volatile off the high. Okay, so no, none of that set up. Damn, these all worked without any counter rotation. Hold on a second. I got to find one that failed one of the anomalies where they were close, one of the fractals when they were close together. Okay, so here you go. So let's say, right in here, I look at this and I go, this is my short, right? And I'm going to use this fractal right here as my stop instead of using the one at the very top, right? So I'm short here and I go, I'm going to stop it right here. And let's just say for the sake of conversation, I don't scale. I think that's the top and we're going to go to 0, right? If I use this as my stop, right? Most of the time, I guess it would apply more to the longs and shorts right now. And that is a really great combination. I'm going to switch off of this for a second. You just got a fantastic combination right off the top, right? That right there is about the best combination of bars you can get. I understand the shorts are not working very well right now, so take it or leave it. It should not break the high on that bar right there. So your stop has to be 78.14 from 78.07. Ends up making it a 7-point stop, right? Shouldn't get above. I know the market's going straight up, right? I get it. We haven't broken a wave or anything else. But that combination, speed bar, double arrows down, purple bar, is usually fantastic. So I'm not calling a short. I'm just going to point out where it is. Obviously, the market's on rails, and people are just think the market is fantastico. And there's obviously no actual resistance up here. So there's no trade to be done there per se from a location perspective, but that combination of bars is really freaking powerful. What you don't have is a fractal trend line break, but I would not be surprised to see us wind down from that. You've got to get underneath this guy. That's the only thing you have to lean on up here. There obviously are no zones, right? And you obviously have no 3 across, so you just got to see if they'll hold that. And you have to get past the lunchtime rush, which we've pushed up every day in the lunchtime, which is why I'm not taking a trade here. But I do want to point out the combo. There's not been a day we haven't pushed up into New York lunch. So I was about to punch in my 10, and I was like, New York lunch. So now that I'm not taking the trade, right, I'm just noticing it. That combo you want almost every single time. Watch it just fall apart now into New York lunch. But that's okay. It's got to get underneath this at a minimum, right? So this bar, see how that started the last little wave up, and there's almost no delta on that push. So once we're underneath here, it's free to go do whatever the hell it wants to do underneath, because there's no volume that went off. And that run right there, and that sure looks exhaustive, but they still got to get underneath it. And then the other thing we're forgetting about, right, when you get got in the weeds, is there any actual counter rotation anywhere in the market? And the actual answer is no, not yet. So no trade, but that's a great setup. That often leads. See that setup? The only thing it's missing is a pink bar up. I'll show you what that looks like when it works beautifully. Here, let me duplicate the chart. I'll show you what that looks like when it's fantastico. We had one the other day. It had to be a Thursday afternoon or Wednesday afternoon at 2 o'clock. Let's see. I'll just make this right. So that's the better combination right there. So you get purple up, pink up, purple down. the double arrows, and it leads to nice rolls, but that wasn't what I was looking for, right? Same thing here. I mean, that's usually such a money trade that it's disappointing that it stopped this morning. That's all right. It's just this particular environment, right? But the other day we pushed up right at 2 o'clock. We had the exact, as a matter of fact, I was on, there it is right there. See that? Pink up, purple down, double arrow down like that. So I was talking to Daniel and I caught that. I was like, that is it. All right. So I guess the only thing this is missing is that pink bar up, and it had three across, I guess, was the other element. But what we have right now is pretty damn close, right? When you get that combination of bars there, the P&L from the win rate is just insane. Now, this was the afternoon where we had Netflix numbers. Now I remember. So Netflix came out right after market, and I think the numbers were probably leaked here, which is why we ended up with that roll down at the top of the hour. And then it flew literally in minutes the other way. So this was, we went from an uber narrow range to go from 76.84, 76.52 to a new high, 76.92. I think we came all the way back to 52 before going back up again. Let me look. We didn't quite make it back to 52, but then we went 96 to 60, and that was all in these two legs here all took place in under a minute, right? So when the volatility opens up, it'll open up and it'll be vicious. But that combo right there, which is speed bar, fractal, speed bar, shift down, arrow, you still got to get underneath that wave. But in any environment but what we are in right now, I am so loaded on that combination of bars right there. It's not even funny. Under shift up, speed bar, fractal, shift down, purple bar. I'm willing to lose money on that setup, on that series of signals. I'm willing to lose money every single freaking time that combination shows up, without exception. There's no place where I wouldn't be willing to do that except straight up and at all-time highs, right? So I just have to surrender the fact that they're not interested in selling it here, not yet, and that I'll probably miss the break because, right, if I keep taking these and they keep stopping me on high odds setups, right, I just have to know when to turn it off. So again, I probably should have taken the same thing. There wasn't a shift up here, but you got the shift up over here, then the fractal shift down with the arrow down. I probably should have taken it right here. It would have prevented a stop and let me get out the scale, but I waited for the shift. Again, I traded right around a retail location, so that's fine. It's still set up, right? What I was looking for is this shift, push underneath and shift down and fall away. So I guess this bar, if I was willing to move my stop, right, but I'm talking about 3 points of compromise to start back up a bad habit of moving stops. I'm not willing to change that. It's 3 points. Who cares about them? So at any rate, that's a very powerful combination. Whenever you get to shift up and then you get a fractal speed bar, shift down or arrow down, whatever you want to call it, that is very, very powerful. And it repeats really beautifully too. We haven't had it in quite a while. You've gotten it off the bottom. Here, I'll show you for the long. 3 across, shift up. No. That was shift down, purple bar rolled at the bottom. And then see how you got over this last wave and it was gone. See this? That is what we're looking for at the bottom. Shift up, right? And then bam, short squeeze to the upside. But we actually need someone to actually be willing to roll it down. And see that right there? Pink up, speed bar, shift down, purple. That right there. Fantastico comment. Like I said, usually it's worth 10 to 20 points. Not here. Too bad. It's usually a great trade. And now we go to our lunchtime. Previously programmed. Let's push it to a new high over New York lunch. Program previously announced on all channels. And ES pushing to a new high too. Also, ES is not matching up. Here, we can kill this. I don't need it. ES is pushing to a new, continues to push to new highs. I don't see a reason why NQ would not continue to do the same. And that's too bad because for most of the year, that pays you huge dividends. And that is exactly why I didn't take that trade. But then you end up missing when it does work. So, or 3 across by speed bar. Watch for the shift underneath during launch to see if there's any profit taken on this thing. Shift up worked again for a nickel. I should have taken that. 3 across, shift up. It was enough to drive someone to drink. We're all in the same boat. We can't get long entry, and shorts get blown up. All shorts. And I will start charting the Russell again tonight. I will start posting them next week after I have a couple days to get back into the swing of things there. New high and Q. Not up 100 yet. Imagine that's coming. Shift up, pink bar. Shift down, purple. It'd be good if this is a speed bar. Sets up a short underneath that pink bar. Again, which poison are you willing to take? All right. No shorts have been working there. So when it works, you're going to go, oh, I should have had the short. Well, shit, you got to actually have location. This is a top of an open window, mid of a half gap. It's a good location normally to take a short, not in this environment. Just a target in this case. Remember, this can get traded through on the downside too. Right? What goes one way goes the other generally. CL right back to the highs. I should have taken that shift up. That was a good trade. Sorry, guys. And I'll tell you, I am struggling with taking longs at the high. So there's no intraday volatility in CL. It's frustrating. Like just historically, 20, 30 ticks, 40 ticks, 50 ticks down to get location. So it's hard just to go, nope, not going to do that. 3 across, shift up, coming up on NQ. Again, this is mid of the half gap. It's normally a fantastic place. I would scale some there. It would not be shocking to see rejection out of this area. Okay, I'm not going to short ES. There's no rotation, but that is normal at that location. If I had to bet money and I thought we had a two-way market and I thought we had any chance of coming back over here, I would load the boat on that trade normally, not at all-time highs. I know I'm probably wrong for not taking that trade. I'm not willing to take the 4-point stop here and just straight up. Just, I guess if I lose, I lose out on that. But that is normally one of the best locations you can possibly humanly have. And you can see the computers are selling it. When they got to the mid of that, see how they came right in almost immediately and offered. Right, that's why you get the back down like you're getting right now. Just the odds are too high. They're going to push through it with an algo or squeeze it through or whatever it is that they're going to do. It's just on rails. So I am persona non grata on shorts. and particularly in ES where there's no evidence. I know I'll kick myself when I see it down 10, but I have no choice. They just don't want to sell. So, guys on YouTube, I know it's been a slow morning. There's nothing else to show you here. The buyers are in total and complete, utterly in control. So, again, when it goes straight up off the open, right? So, just to review quickly, we open and we go straight up. There ain't jack for me to do. It's all there. I know if you're a momentum trader, that looks fantastic, and if you made money in it, I'm happy for you. I really am. It's just not me, right? You will have to find a momentum trading guy to follow if that's what you need. I'm not that, at least not in this environment. CL pretty much has been straight up. We obviously came to the white zone and rejected, but yeah, that's not a short market, not yet. And you break that swing there at 21, and maybe you have something to work with. And then finally, NQ. Oh, did I wipe out all my zones on NQ, or do I have? Maybe I wiped them all out. Doesn't matter. Sorry, I'll go back and reprint my zones. But yeah, there's nothing for me to do there. That's 5-minute bars, right? Is all. It's just not me, so that's all right. So eventually, if you're making money, it'll change. It's good that you're making money. If you're buying it on the open every day, just make sure you know what it looks like when it stops working. And we're just in one of those extraordinary times where the melt up is the trade. So, and then there's no counter to get in. So you're left shrugging your shoulders. So, shrugging my shell. 3 minutes till top of the hour. We'll see if they can push through New York lunch. And I am not going to torture myself through New York lunch. I'm going to take a long lunch of an hour and a half, guys, and then I'll be back. And I'll probably sit here and watch it go up in the afternoon too. So that's that. At least I felt somewhat productive by teaching this morning because there ain't nothing else. Right? I don't care about the stop. The stop was fine. Just a few contracts. But I am frustrated that I'm not making any money or finding any setups that I feel uber confident and just going, yeah, I'm willing to lay it on the line with this. Anyways, that's all I got. I'm sure we'll have new highs over New York lunch because, fuck, what else is there to do? Anyways, thank you for joining me on YouTube, guys. Trade well. Don't lose your money, right? Well, it's a long freaking year. If you don't blow, if you're having struggling, and I am, I'm struggling to take the long, right? Markets change, and you got to know what markets you trade well, but don't blow up. It's my only suggestion. I know I'm not going to. So, anyways, talk to everyone in just a little bit.